we ourselves are comforted by God. Psalm chapter Psalm chapter 23, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. Matthew chapter 11, verses 28 to 30. Come to me, all who labor and are heavy laden, and I will give you rest. Take my yoke upon you, and learn from me, for I am gentle and lowly in heart, and you will find rest for your souls. For my yoke is easy, and my burden is light. Psalm chapter 119, verse 76. Let your steadfast love comfort me, according to your promise to your servant. Psalm chapter 73, verse 26. My flesh and my heart may fail, but God is the strength of my heart and my portion forever.
Good morning, everybody. What's up, Tony? Is that a question that you left in the chat? Once you master patience, is that it? But yeah, all right, everybody. So, what are we going to do today? Right, we're going to do the same stuff that we do. We didn't have a call previous Sunday, but we're back, right? There's been a lot of struggling going on for a lot of people that have been reaching out to me on Instagram. A lot of people blew their account last week. The time distortion, the certain elements that were active with the consolidation, price getting stuck. There's been a lot of people that overdid it, going completely against what I tell them to do. When price is not moving properly, regardless, there should never be more than 2 trades taken in a day. Because ICT himself has even said, once you take that third trade, if you've taken 2 losses, you're already from a place of fear. You got to be able to reset. So you want to make sure you're giving yourself the okay to not take a trade or to just eat the loss and get over it. Okay? Because if you don't, everybody and their mama is going to think, oh, well, I lost this trade. Now, maybe I was a little bit late, but they're not really analyzing things entirely, when they're in that state of mind, especially new traders. When you get better and more experienced, obviously, you could bend those rules a little bit. I do it all the time when it's necessary. But for the most part, it doesn't really happen a lot, because I'm more than happy to take losses. And if I take a loss, generally the condition is not what I anticipated, or it's just a garbage condition after a large range day. Okay, that happened last week when price accelerated to the buy side pretty aggressively. Okay, it ran up aggressively, and then going into this day, it started to retrace, but then it hung around. And inside here, it's a beautiful example of, large ranges lead to small ranges, and small ranges lead to large ranges. Okay, you could see that beautifully taking place. And a lot of times after a huge run like this, you should expect the price is not going to just keep going. Okay, you should expect the price is going to probably want to do something like this, right? It expanded aggressively, and then once it, kind of hits a PD array, which it did, which was a weekly fair value gap, opposed to this buy side delivery, you want to kick yourself into the mode of anticipating retracement or consolidation. Okay, because it's going to happen, especially if there's a news event coming out, or if we did not at all do any type of manipulation below the open price, which it didn't do, and it was just accelerating. So that's when you identify the counter trend idea that I talk about or have been talking about the last couple of months. When you see price going, in this case bullish, and it hits an opposing higher time frame PD array, or takes a liquidity pool, which it's like this high, that's a PD array. But once that's fulfilled, you should automatically be thinking there's probably going to be some type of retracement. Matter of fact, I'm demanding it do a retracement into a logical PD array before I look to push much further in terms of the overall direction price is headed in. Okay? Just that simple thought process, you employing that, will save you from a lot of losing trades that you probably engage when the timing was off in terms of where price was at, what day it was. Maybe you missed the fact that it hit a higher time frame PD array because you're so stuck on the lower time frames. That's an issue, and that's why we focus on higher time frames more often than not. That's where most of our time is spent. As ICT has said before, that is where he spends the most time. He spends the most time planning, preparing, strategizing in terms of what price is going to potentially do, what it has done, where are the significant liquidity pools, given the list that I've given you guys multiple times. And then you make a determination based off those pieces of information plus power 3. But again, once it hits a higher time frame PD array, expect consolidation / time distortion / possible retracement, because that happens more often than not. Why, you may ask? Well, when price delivers up to a particular PD array or a liquidity pool, most of the times they're already positioned, smart money. So they're going to want to pull price back down to either fair value, aka fair value gap, or they're going to want to reprice a little bit to fill in a little bit of the stuff that was left available in terms of inefficiency, or run a previous day's low because there's liquidity there into a PD array and then start to take off again. Once it does that, that can give you the go-ahead to start anticipating price moving in your intended direction. Sometimes it may go deeper, right? But nonetheless, when you see a huge expansion or a large range day, let alone the PD arrays, expect a slowdown when a large range day takes place. When London is fast, right, and it's extremely quick, and it didn't really slow down at all. Well, when you go into the AM session that next day, that's another another scenario to anticipate price giving you a hard time and stalling out to fool you and everybody else. And then start to get people thinking opposed to what's actually taking place because everyone is so stuck on those lower time frames. All right, so that's a very important piece of information that most of the time experience teaches you. But I've mentioned it multiple times. ICT's also in the last 2 years mentioned it. So yeah, hopefully you take it to heart. Pretty much everything we talk about is used to help you, right? So don't take anything we talk about lightly unless it's like a side conversation about something that has nothing to do with trading, okay? But yeah. So yeah, as always, we're going to start here on the economic calendar. Let me know if there's any lag that takes place. My internet has been kind of seeming like it's going to give me a problem this morning. Hopefully not. But yeah, if there's ever any issue that you see on the stream, let me know. And Tony said, no, it's a statement. He was impatient and didn't follow the rules. Yeah, it's the things I just mentioned also help you become more patient over time. Because if you see a large range day, the new trader will be like, oh my gosh, it took off, I'm missing something, right? But the seasoned, more wise trader is going to think, okay, it took off, let me be patient and wait for a scenario like I just mentioned. Wait till it gets to a higher time frame PD array. Why is that important? Because that's where big moves take place. They don't take place just because the higher or the lower time frame is doing anything. Oh, what's up, puppy? Sorry, my dog just came in my room. Come here. This is my dog, by the way. Say hello. All right, go over there, buddy. Sorry about that. He wanted to say hi. So yeah, big moves, big range moves, large range moves, they come from higher time frame framework. Okay, if you're looking for minimums, that's fine, but your liquidity pool targeting should be previous session highs and lows, maybe 1 hour highs and lows, 15-minute highs and lows, but all that works inside of whatever this higher time frame is doing. So if you want large range moves, frame things on the higher time frame. Because it's a higher time frame, Tony, this is directed at you, it kind of forces patience. So the more that you're leaning on higher time frame frameworks and higher time frame points of interest, the more patient you'll eventually become, because you'll realize that's where everything is rooted in, right? If you want to see price come from this fair value gap up, or if you want to see price get up into here, it's going to have to use some form of a PD array, or it will use, doesn't have to, it could just take off, but most of the time it will use a PD array like this one and then take off, right? But the stalled out effect after large range days, the likelihood of price retracing when it hits an opposing PD array or takes a opposing pool of liquidity, these are all things that can or like circumstances that can get you caught up in the slow, stalled out delivery that takes place at times when these conditions take place. It's anyone could pretty much buy in a situation like this and make money randomly, but it's the times like this where price is anticipated to stall out, which most people don't know, right? Those circumstances that end up breaking people's overall progress and makes them have this false sense of failure, false sense of like anguish a lot of times for new traders. Tony said, exactly. I seen it on the 4 hour and I was impatient. 3 candles later it started. Yeah. No, so I want you to change the wording right there with how you're describing this. You don't want to have any type of negativity towards it or yourself ever. I don't care if you take a loss. I don't care if price doesn't play out the way you wanted it to. It's always from a lens of I'm learning, because what traders do when they're negative towards themselves, it's like, when coaches are coaching people in sports. In sports, it's a different world, because you could, to hype your team up, a lot of times you want to, kind of be aggressive, and in trading, it's not like that, because you're building more scar tissue off of an event that didn't play out. And so eventually it ends up piling up. And then guess what happens? Your confidence gets affected. I did that same thing early on. This information or change in perspective obviously came from ICT. I didn't think anything of it. It sounded like a crazy thing. Like, aren't I supposed to be critical to improve? But a lot of times we are overly critical. And unfortunately, that negativity will spill into our trading, and it'll give us the beaten dog syndrome, And you don't want to have that. Tony said he beat himself up all weekend because I know what I see and I can do better. Yeah, see, I like that I know what I could see and you can do better. I like that perspective, but do not beat yourself up. Well, because what's the purpose in beating yourself up? You made a slight mistake. We got to expect being imperfect. And, it's even more important when we're trading live funds, because we don't want to have any type of negative feelings towards anything that we're doing in trading. Because, again, it could lead to us being impatient. It could lead to us attacking our self-worth. Okay, it could really, really affect in a lot of cases our ability to execute on the next trade, because we were so caught up in the slight mistake that we just made. Okay, so again, these are things that a lot of people don't like to hear. They want to hear me just give them freaking entries and where's the bias and this and that. But again, I can give all that. I can make it as easy as possible. But if this aspect of things is not understood, this perspective I got a lot more into as I grew into the trader that I am today. Okay, it took me years to be able to even think about this stuff as important. because we're so caught up in the glitz and glamour of trying to get to our highest goals, making 100,000 a month, 100,000 a year, 10,000 a week, whatever. And we lose focus or lose sight of what's truly going to impact our ability to get there. And a lot of it, again, is psychological. The technicals, ICT says, can be learned in a year or two. It's what happens after that, what you need to learn and grow into after that, that is the thing that takes so long. It takes so much time because we are stubborn creatures. We don't like change, okay? We don't want to change. We don't want to admit that there's something wrong with us at all, even when it comes to like a mindset that's clearly going to affect us, whether it's in normal life circumstances or especially in trading. And a lot of problems we have with our technicals are going to come from how we're feeling, how we're thinking. Like if we had a bad day or something, we're going to come into the market, although we know all these different tactics, we may end up being impatient and rushing things because we want to hurry up and make that bad feeling go away. So again, it's the things that come after you learn the technicals. Once you're consistent with that, it's the thing that comes after, which is psychological, that takes so much time and is generally, don't discount what I'm about to say, because it's vitally important. But that secondary thing that we have to learn about after we become consistent technically is the main thing that makes people fail. Okay. Because, whether it's self-talk, the way that we talk to ourselves in our improvement process or reflection, or, it's just being overly critical, or being impatient. Those are the things that destroy our progress. Okay. And again, everybody wants entries and models and how to call bias and all this. But again, none of that is going to be able to be glued together properly if this is not something that's focused on. See, if we go back, because I've coached a lot of people over the last 3 years, going on 4 years, and, most of the time people come to me with these psychological issues. It's the number one commonality that most people have that have been trading for a long time, but are still failing. And a lot of times the new traders are just not aware of what they're not aware of. So, given that experience I've had, when it comes to coaching traders and teaching them the important things and how to break certain bad habits and what to focus on, all of that experience guided me into creating this little list here. Whoops. Okay, so if we drag this up, see, and there's a reason that this is the first thing that's in the list of focuses, right? Mindset, expectations, and psychological management processes. What I just mentioned is part of that process. There's a lot more, obviously, but that's number one thing, because all this beautiful, shiny objects that are down there that are proven to be able to be effective, and I'm not a financial advisor, and this ain't financial advice, but this stuff makes money, okay? But again, it's the operator that has to deal with their mindset, expectations, and psychological management processes, okay? Because that is the barrier most of the time for people either being successful or failing in their trading. And let me actually just pop this thing up real quick, right? Got to throw that in there, right? I forgot to do it in the beginning. But per ICT's advice, given he got sued for people trying to attack him for being a supposed financial advisor, you got to always pop that up if you're live and you trade live and teach people the real concepts that actually make money. But it's something that you cannot overlook, okay? And I spend a lot of time talking about this stuff all the time, and I've gotten a lot of people bitching and complaining about that, and this ain't a place for you if you don't like to hear these types of things. And no hard feelings, but the complaining is another reason why, and like the demanding and being impatient, like trying to make me teach you how you want to be taught, is going to be a huge barrier for anybody teaching you anything, okay? Especially in this industry. ICT's mentioned that as well, but I just wanted to throw that in there for those that have been blowing me up, bitching and complaining. It's super annoying, and so don't do that, because I won't pay attention to you. That doesn't mean don't ask questions. That's not at all what I'm referring to. But the complaining, trying to teach me how to teach you, it's unnecessary. And, you can go find somebody else that's going to deal with that, because I'm not. Okay, so yeah, I hope this kind of drove home the importance of the mindset and expectations, and the importance of psychological management processes. Again, part of that is really teaching yourself to be positive even when you take a loss or make a mistake. The best way to combat that, one of the most easy things to implement is just to catch yourself in the moment and write down through every mistake that you make, or everything that seems confusing. Maybe that's an area where you're critical at. But anywhere you find that you're critical towards yourself at, or if you make a mistake or anything, write down your responses. And actually, ICT gave this little drill that I did a couple years ago. And it was like a psychological analysis process, right? In terms of your engagements and your experience studying as a trader. You basically get a piece of paper throughout the day, not only when you're trading, but just throughout the day, right? You get a piece of paper, get your pen, and from the start of the morning, even right when you wake up to the time you go to bed, do this for like 2 or 3 days, or maybe one day will make it even just as obvious as it should be. But you want to take this piece of paper and tally off every time you think about anything negative throughout the day. At one point, I caught myself thinking about 567 negative thoughts throughout the day in a 13-hour period, and I couldn't believe that was the facts. See, we don't realize how negative we are in our minds. Day-to-day life, it's just subconsciously things are there, especially if we've been through a lot of things, which I have, from being homeless and, all types of chaotic stuff that's happened in my life. It got to the point where I've developed this habit, and it's something that we have to become aware of and acknowledge if we're going to be able to adjust our mindset as a trader and make this a positive, effective experience as we're growing into the trader we're looking to become. These are things outside of trading that will bother us in trading, and we won't know it unless we use these little tools like getting a piece of paper and identifying how many times we're thinking negatively. Obviously, you don't want to pay too much attention to it and make it like a inaccurate data point. Like, you want to honestly do this. You don't want to sit there and think, oh, I'm just perfect, I never think negative, just to try to tell yourself that. You want to make sure you're doing actual work with this. Another book that ICT mentioned that was super impactful for me was a book by Larry Williams' son. I think he said, I think it's called like The Mental Game in Trading instead of The Mental Edge of Trading, or maybe it's vice versa. But it's one of those two by Larry Williams' son. And I wish I had a picture of it. But yeah, you should definitely check that video out too, because Larry Williams' son is a psychologist, okay, and he specifically specializes in traders because his dad was obviously Larry Williams, a legendary trader. So again, these are things outside of the charts that you definitely want to pay attention to. Again, it's not the fun stuff, but guess what? Excellence is not always fun, okay? Success is not always exhilarating. To get there, a lot of times there's a lot of boring ass shit you got to do. Okay, there's a lot of, monotonous things that you're going to have to continuously operate within to be able to solidify certain things that you may not be thinking about right now, but they'll impact you later on. Okay, it's much deeper than just identifying where price is going. Okay, there's many traders that have come to me that, I've taught them how to call narrative and bias, which I do here on a weekly basis in my private community. Continuously. But even when they grab onto that, they still think that it's not enough because they still continue to fail and lose. Well, that's the thing. A lot of times we're focused on things that we don't know aren't the most important things. Like the entries, for example, is the least important thing, which ICT has mentioned over and over and over. Okay, you got to know where price is going. You got to know how to validate and invalidate. You got to, first and foremost, be able to manage your mindset. When you're in a trade, what are you thinking? All right, are you thinking, oh my God, it's going to stop me out? Because again, that's another thing to tally on to onto your paper. You know, you got to be very transparent with yourself so you can admit when there's an issue. You know, just like people that have, you know, drug issues. You know, they say the first step is to acknowledge that there's a problem, and many don't, so they get stuck in that vicious cycle of, you know, addiction. So it's the same with trading. You know, if you want to break the negative thinking habit, you have to acknowledge. Once you do the process that I've mentioned, you know, there's other ways to do it, but, you know, you want to be able to acknowledge wherever your issues are, honestly, without any fear of, you know, judgment, especially if you're going to share it with people. And then, you know, try to figure out ways to focus on fixing those things, because the positive things will get outweighed by negativity. And us as creatures, because we are descendants of like cavemen and all that, like from, you know, ancient times, our brain is wired to anticipate danger. Okay, so that's why it's easier to be default negative towards yourself, and you have to be extremely intentional when you're trying to be positive. Okay, it doesn't just automatically happen where you're just positive. You know, it automatically will jump to a negative situation because it's trying to identify danger. It's trying to identify anything that can hurt the host. Okay, you right? So nature is against us even as traders. All right, and obviously the market tries to weaponize this stuff against us to siphon money from those that are unaware of these things and are impatient to the people that are aware of these things and are patient. Okay, so again, this is stuff outside of the chart, but it's very important stuff that, you know, most people don't pay attention to, and a lot of times it can be the exact reason why, even though they've spent 10 years trading, they're still failures. You know, because they are just refusing to do what's necessary. You know, aside from making sacrifices in your life to make time, there's also sacrifices you have to make in terms of accepting things that may be uncomfortable and start to work towards fixing them intentionally. Okay, and most people aren't aware of these things that we've talked about. So if they're not aware of it, if there's no awareness that this is something that needs to be focused on, that could be, it's, you know, if it's not, it's detrimental. They just don't focus on it. Okay, and then as a result, they deal with the consequences of that. You know, of not acknowledging and, you know, making a concerted effort to fix these issues. Okay, by doing little drills, you know, and studying up on these types of on these ideas. You know, there's a lot of psychology books that are pretty useless. I do have a short on my YouTube channel where I highlight the important books that I've come to really appreciate over the years, even more so now because I've gained much more experience than when I first read them. You know, you also want to, you know, not only rewatch videos that you've seen as you grow, but you also want to reread books that you read at particular stages of your development, because just like how the concepts you're studying, if you watch the videos once or listen to me talk about something once, your mindset and skill set is at a particular level. So when you watch or listen to something later on or read something later on after you've gained more experience, your perspective has now shifted. It's changed and got more wise. So you're going to now have a different experience when you watch or read or listen to something that you listened to or read or watched a long time ago. Okay, so that's why watching and listening and reading things over and over again, as you improve, as you become the trader you're trying to become, is going to become very important. Okay, that's why when you watch an ICT video, same with me, right? I watch an ICT video I didn't watch in a couple years, and since my mindset's different, my focus is different, my understanding of what's important is different, I pull out even more gems from the videos that I may have missed because of my perspective at the time. Okay, so yeah, you know, it's been a little bit of a different start, right? Real focus on these very important things. But again, you know, if I'm not going to tell you this stuff, you're not going to tell yourself this stuff. You're probably, you may have to wait a couple years to be aware of these things, let alone try to figure out a drill or processes to improve upon these things. You know, so again, they're very important. So yeah, if you guys have any questions about these topics we've just talked about, obviously let me know. Those of you that are in my private community, obviously there's a heavy focus on that. So same with you, just let me know. And we can hop on Zoom and figure it out. Okay, so yeah. So with that being said, let's get into the technical aspects. Tony said, thanks, going to do better and wait. You don't have to trade every day. Okay, you should look at the chart every day, but don't trade every day. Minimize it to, 3 days a week. Tuesday, Wednesday, Thursday. Give yourself the best opportunity until you learn how to navigate Mondays and Fridays, which I teach as well. For example, just a small gem, when you're trading on Mondays, Friday's high and low are generally important. Those are the near-term liquidity pulls if we're still inside Friday's range. Same with Sunday. Okay, in the previous week's highs and lows, obviously can be pretty important factors when you're trying to trade throughout the week as well, and find areas of liquidity you can pair your orders with to position at the right area using Power 3. Okay, so by the way, Tony, thank you for sharing that with us. You definitely reminded me of a topic that is near and dear to my heart, because I struggled so badly psychologically because of the things I've been through, and lots of stuff I've had to overcome, from the world of being homeless and dealing with a bunch of chaos when I was younger. So yeah, it's very, very important. Okay, so thanks again. But yeah, so as always, we're going to start here on the weekly chart from the beautiful, wonderful bonds and yields markets. They've been kind of, unreasonable in terms of correlation. The yield markets have given this rally up. They've been very gappy, which, with all the stuff taking place, it's to be expected that there's going to be a lot of gaps, very volatile environment that we're trading in. So that's another layer to why things have been a little more difficult. There's a lot of changes taking place, lots of news hitting the headlines. So it's an environment where your experience is going to really shine, and your infancy as a trader is going to also shine, unfortunately, if you're not careful. Okay. And, one way to not let this type of environment early on hurt you as a trader, you got to follow the rules. Risk only one or two trades, and your risk should be cut in half. Okay, half of whatever it is that you're trying to engage. All right, and then of course, eventually you'll be able to navigate this stuff reasonably. But even, with the experience that I've gained over the years, I've still been trading at, 0.75% or 0.5%. Nothing's been at 1% given the conditions. And we've still been able to call the market fairly accurately, 80% of the time, So, it hasn't really been much of an issue. We have started multiple sessions the last 2 weeks with a intended narrative or bias, and had to wait till after the silver bullet time window to look to engage or find an opportunity, or to find price moving in our actual direction. There's been a lot of time distortion, and when price is taken off, it's really taken off. So it's given not much of a chance to get in if you're not comfortable with catching a moving market that's already started really delivering, which is, again, something we talk about in terms of continuation variations of models and how to participate when price delivers, what liquidity pools are important, because none of that stuff changes no matter what condition we're in. And, it's been proven to be effective, even in a condition like this. So, and again, those are things that we've talked about decent amount of times already in this year so far. But again, if there's anything you guys need me to rehash or spend a little more time on, you just have to let me know, and then I'll start a video talking about that, or just make a separate video entirely. Okay, so yeah, we were identifying this up here, right? We identified this wick midpoint, this fair value gap down here. If you go back in the videos from over here, at this time, I said that, we want to watch and see if this holds. If it does hold and gets back above that and this fair value gap, the target would be this wick, this high, and then eventually, if we can get more excited, it can get up into these areas. So all of that has come to fruition. If you're new here, go back and look at the videos from these moments, and you'll see clearly that I identified this and talked about this, And you can see that it's played out. Again, the correlation overall between the behavior DXY has with the yields and the bonds and the indices have been a little shaky. As you can see, this has been moving higher, but the indices have been also moving higher, which is not what we want to see in terms of risk on, risk off relationships between the interest rate markets and the indices, okay, or the yield market and the indices, right? But since we're up here, prices basically delivered fairly nicely. We do have this bullish order block. I like the fact that we use this as the bullish breaker, aka balanced price range, or a wick overlapping this fair value gap, which created a balanced price range as well. We can kind of see how that behavior has held, and it sent us up above this fair value gap. And if we put on some of our annotations real quick, again, we have this monthly high. All right, we have a previous week high. Right, so in your chart, you want to label this out. Okay. I don't know why it's doing this. It's so weird. It's not letting me right click on the freaking thing. Is it doing that with the other ones too? No. Well, that's kind of stupid. Okay. What am I going to do about that? Here, let me actually switch this out since it wants to be an idiot. Still not letting me right click. Okay, now it's not letting me draw. What is happening? How strange. Yeah, that's strange. I guess we're gonna have to do this without me able to annotate on this chart. I have no idea why this is happening. So weird. What a weird situation. This one too? Oh my god, dude. Really? That is very strange. It's not even letting me double click on it to pop it up. Okay. Well, I guess, man, that's annoying. I don't know why, even this chart, pretty much all of them now. I have no idea why that's happening. I'm sorry, guys. Damn, now it's every single chart won't let me right click. I have no idea why. I'm gonna have to see what the hell is happening later. But I guess, oh, how strange. That is so odd. Oh my goodness. Yeah, sorry about that. I don't know what the hell just happened there. I appreciate y'all bearing with me. But yeah, so this is a monthly high or a weekly high. So when you're on these time frames, just for those that may be new, the first thing we do is start from the bonds and yields, then we go to the currencies, then we go to the DXY, then we go to the one indice that we like, and then we go to the three indices, right? And then we observe and get different things that are important from each of those time frames. We start here and then go up to the indices later on, because this back-end knowledge helps us determine how trustworthy a particular narrative or bias is on the indices. Okay, because everything is connected and everything works together. So in terms of risk on, risk off, understanding the entire market helps us identify more accurately what the bias and or narrative is going to be for a particular month, week, or day. So yeah, or quarter even. You guys have seen me do the quarterly analysis too, and then that also plays out. It's pretty fascinating. A lot of patience is required and conviction, obviously, for those higher time frames like that. But nonetheless, it's not anything that a little experience won't help you learn. So yeah, let's quickly jump through this. If I can find it. Okay. Previous week's high. Yo, what's up, Adam? Welcome. How to master intermarket analysis. Any secrets, bro? So pretty much like, there's not necessarily secrets, but there is like intermarket relationships that you obviously want to be aware of. I do have a list I can give you real quick. Just like a rough. It's also in my free Discord if you want to go check that out. It's spread all over my private community. But let me see if I can find it in the free Discord. Intermarket. Oh wait, no, whoops. Risk on, risk off. There it is. All right, so the link's in the description. Every link to everything that I do is always going to be in the description. I appreciate all you guys that have joined liking the video. Really appreciate it. I'm glad you guys have been getting value from the things that we do. So yeah, so risk on, meaning risk on basically refers to the interest of large money going one direction or the other with certain assets. But risk on specifically means bearish DXY, which is basically leaning towards them being okay with putting risk on other assets outside the DXY. Risk off is pretty much they're not interested. They're risk off of the other assets outside of DXY. Right, so DXY is bullish for risk off, DXY is bearish for risk on, and again, this is the breakdown, the simple intermarket relationship / risk on, risk off breakdown or template that you can use. So when you're analyzing the markets and you see, stocks, commodities, and currencies doing something, and then you look at the bond yields and the DXY. You can make a pretty solid determination. Oh yeah, 100%. Forex is actually included, right? Currencies, right? You still want to use the other relationships. We're just using stocks, right? So we want to see commodities bullish, currencies bullish, bond yields bearish, DXY bearish for a risk on environment, or a bullish environment for stocks, and then obviously the opposing views for risk off, right? So risk on is this, risk off is that. But any asset you use, whether you're trading commodities or even if you're trading the interest rate markets, these relationships, if they're in play, and you're, maybe you're trading the bonds, all right, the bond yields, and you're trying to be bearish because you see it being bearish. Well, you want to confirm that with the DXY being bearish, the commodities being bullish, stocks and currencies also being bullish, right? So that just further amplifies the, your conviction. Because again, the whole point of this channel obviously is to bring traders from confusion to clarity with smart money concepts or ICT concepts. That's the main focus. It's not signals, it's not anything else, because I know that if you can gain clarity from being confused, you're going to build confidence. Once you build confidence and you keep studying the things that we talk about and dig deeper into ICT concepts, the better chance you'll have, and you'll be on the right path. You'll be focused on the right things, because there's thousands of ICT videos. There's so many concepts, and we talk about narrowing your focus. We talk about what's required, what's not required. We talk about the fact that this is a very personal journey. What works for you may not work for someone else. Like, I don't use certain concepts, and you won't either. I don't use vacuum blocks and all these other different things, because it just isn't necessary to what it is that I operate within. I know how to identify them, but even that is overkill. I don't need it, because I never really gravitated towards using those things for any type of real reason. And it hasn't affected anything. ICT himself even says that just because there's a lot of concepts doesn't mean that we're going to have to use every single one of them. So again, that's one of the key elements to what it is that I do and what I teach and how I coach traders. I make it known that it's okay to not know everything. You're not going to know everything, okay? Unless you want to, keep on learning for 30 years and not really trade, or maybe less, right? But there's not one trader on this planet, aside from ICT himself, that knows every single concept, So yeah, it's going to be that way for you. I gravitate towards a handful of things. I can identify many of the concepts, but I have my framework. I have my 10 categories / processes that allow me to have a structured process and trading plan or business plan that I share with everybody, so they can also kind of see that as a template they can use as well, and piece together whatever PD arrays and things that you like in ICT concepts. But as long as you can get an answer to, let me pull it up one more time. As long as you can find processes, and the concepts in ICT's concepts that can answer all of these categories in here, and can basically have a process for each of these different categories. Obviously, there's subcategories, but these overall can basically categorize the processes you need to do or get better at. If there's ever an issue or a mistake that you make, you can also eventually figure out that, one of these categories is where your issue will rest in. So instead of scrapping everything because you had a bad day, because you don't have a template like this to make yourself aware of this stuff, instead of a mistake causing you to totally disregard your entire model and everything related and every process you have, you'll be able to identify or narrow down where your problem is. Because maybe you're good at bias and narrative. Maybe you just get it wrong one day, right? Does that mean that, the whole process is bad? No. You spend time identifying where the issue was, try to categorize it in one of these issues or one of these subjects or categories, and then you can start to really narrow in on where your problems are. And then you can, be easier on yourself. Like I mentioned at the beginning of this video, the first 30 minutes we talked about that. But this is kind of like a companion, and it's a structured process for those that come to me on a one-on-one basis, that come to me in the private community, right? This is a lot of the things that we focus on, and it's something that, if someone comes to me with an issue, I automatically jump to this list, because then once I'm able to categorize it wherever the issue is in one of these areas, since I have so many processes related to these things and I've employed this process for so long, I'm able to then help you figure out what issue or how to fix the issue, or even where the issue is at, like to diagnose the issue, and then where we can place it, and then I have again the processes that can help you overcome that. And again, this being given to you, this mindset being shared with you, and process being shared with you, and the importance of this is a tool you can now use on your own to do this own self-analysis, self-reflection, and problem/strength identification process that you can use to improve. I've gotten so many good responses off this. It's amazing, because nobody teaches it this way. Nobody identifies it like this and puts it on a platter like this. And again, it's just a testament to the fact that everyone's different. You know what I mean? And everybody has their own way of doing things, and their own PD arrays, their own targets, their own style of trading. But universally, this can help anybody, even if you're a retail trader. Maybe there's some things that like SMT that you won't name as SMT, but the foundations of it is just so powerful and very helpful. Adam, I'm glad that the videos help you, brother. Use order blocks, okay. You have one problem when had a weekly bias, but the price gets bearish. I don't know where it's the problem. So there's not necessarily a problem there, Adam. Essentially, you're getting caught up in something I discussed earlier. Okay, when price does this like large range expansion, and yes, your weekly bias is bullish, but price hit an opposing PD array, right? What opposing PD array? That weekly fair value gap. Okay, so I'm not sure if you've been here long enough to have gotten this specific lesson about counter trend trading and when to anticipate retracements or a slowdown in price after a large move. But let me ask you this first before I share it. Have you seen or heard me talk about counter trend trading? Maybe have you watched my counter trend trading video, or maybe you were on the live call that I pointed this stuff out on. Let me just kind of see from or just ask you that question. Have you ever seen me talk about that subject before? Just let me know in the chat. No, okay, perfect. Well, this is probably going to be very eye-opening. A lot of the traders that have spent time with me, they've given me really, really good feedback on this. And it's a very simplistic way of viewing things. Okay, but when price, let's kind of take away all the other assets. So when it comes to counter trend trading, or being in a narrative and managing the narrative / bias within the narrative, when price is accelerating and you have a bias, like your example is bullish, which we have been bullish, it's going to continue to do that for the most part until price hits an opposing PD array on this higher time frame, which it could be any of the PD arrays on the PD array matrix. In this case, it's very easy, right? It's the fair value gap. So price delivered aggressively through that, right? Once it hit that, which, now since you have this identified, or we have this identified, we could drop down now. You could see that, we went from acceleration to pause, indecision candle. So your bias, I'm assuming, was bullish, but you probably got caught up in the stall effect that happens when a counter PD array is met, when price is especially accelerating, and then it reaches that, right? So this concept is probably where your issue resides. It has to do with bias and narrative, okay? And obviously anticipating when price is going to have a consolidation or a possible retracement or rejection. So then price can do something like this and reach to another PD array. Just because it retraces or stops going bullish you have a bullish bias, that doesn't mean that the overall narrative has changed. Narrative on the higher time frame does not change in a very quick capacity. It's like turning a ship. Okay, like a ship takes days to turn, or hours, sometimes days, depending on how big it is, for it to turn. So the narrative overall, where the higher time frame, weekly, daily, monthly timeframes, when they're going to shift overall from one direction to the next, it takes time to do so. This is not enough time. It's not a strong enough response to allow that to be a time where you change your narrative, right? Or turn off from being more favoring bullish to now trying to be bearish in terms of the narrative. Narrative and bias are different, right? When price runs and accelerates to a specific opposing PD array, in this case, a bearish PD array in a bullish market, when it hits that PD array, a lot of times that's going to trigger in either a indecision candle, a consolidation, because it's fulfilled it, or it's going to reject down into a discount array or a PD array below us. So then they can start to push price up again because the narrative has not changed. But when an opposing PD array is met, that's when a retracement can happen and the bias may change on a short-term capacity, like is beautifully shown here. Okay, so anticipating counter trend ideas, or when your weekly bullish narrative is going to stop or be a little more difficult to engage in a bullish capacity, those scenarios take place when we hit an opposing PD array. And obviously sometimes it's going to hit those levels and then just accelerate continuously because, sometimes it does that and doesn't give a retracement. That's fine. But your anticipation should be that once we hit a higher time frame PD array or sweep a large time frame liquidity pool, either a high or a low, your anticipation should be either consolidation or a retracement. If price proves to not want to do that, a lot of times, you can just get in line with price continuing to go higher because maybe it's reaching for something else, and, it's just going to blow past whatever PD array we've hit. I want to make sure that explanation makes sense. Again, I do talk about this concept in a specific video. I don't think it's too long. It's my counter trend trading video. I'm probably going to redo that presentation because there's some other things that I didn't realize I left out. But for the most part, it gives a pretty solid explanation. So I definitely want to ask if this makes sense so far with what I've mentioned. Because again, this is something that really shakes people's confidence. They'd be bullish one day and then all of a sudden it'll hit an opposing PD array, which is anticipated, and it'll reject and they'll toss out their entire bias and narrative. They'll think like, oh, I have no idea what the hell's going on now because it retraced. When, it's simply just doing that, a retracement. 0.02, 0.05, 0.02, 0.05. Is that like a fib level you're mentioning? So yeah, let me know if that's a 0.02, 0.05. Is that a fib? A fib level? If it is, I'm going to have you disregard that. If you're talking about 0.02 fib level, 0.05. 0.05 maybe you can keep, but okay, you get it? Okay, cool. Yeah, this simple concept, I'm telling you right now, you're going to go into the next couple weeks and you're going to be fascinated at how much more like level-headed you are as long as you don't overtrade and over-leverage. Yes, when price does this type of retracement like this and we've been extremely bullish and we're like really pushing for bullishness, you may take a loss in that moment because maybe you'll look to buy, but price will give a retracement. In that instance, all you're going to do is adjust your mindset to, okay, since I took a loss trying to buy here, what levels are below us on the higher time frame? Where can I position at those lower levels to then see price go higher again, given the fact that the narrative is bullish in this example? Okay, all the same stuff is obviously done if we're bearish and price is retracing higher. It's all the same stuff. But yeah, so when price does this type of retracement, you can also start to now think about, okay, that may be a time when I may take a loss. So what is a good risk conversation, given what I always talk about in terms of risk management protocols? What is a good risk adjustment you can make when you see price hit a higher time frame PD array, and maybe you're looking to, in this case, buy? What would your risk protocol be? Do you keep your risk the same, or would it be better to, in this instance, lower the risk because price may give us a retracement? You may be wrong, and be able to anticipate you being wrong potentially, right? What would be the best idea? Keeping risk normal in that instance when a higher time frame opposing PD array is met, or should you drop it a little bit? Let me know in the chat. Any of you guys can answer that. Don't worry about being wrong or anything like that. If you're wrong, obviously you'll just learn. So yeah, let me know in the chat, you guys. And Ahmed, we're getting there, brother. Appreciate you hopping on. But we have a little process. It takes a little bit of time to make that decision, obviously. So yeah, let me know in the chat. half risk. Beautifully. Beautiful. Exactly. Exactly. So, we talk about this all the time in terms of risk management, your processes, when to keep your risk the same, when it's time to cut your risk. See, Tony said he'll keep the risk, right? He'll keep it at normal risk. And of course, that's fine if that's what you want to choose to do. But when price gets up here, generally what I personally do, I will cut my risk, right? So if I'm risking 1%, I'm going to cut it by at least 1/4%, because of the risk of price wanting to look to retrace. And then of course, if I can catch price confirming, maybe it use this as resistance up here, and then wants to show that it wants to give us a retracement into this type of logical level, I may have a normal risk in that regard, because I've seen that happen over and over and over, and I'm very comfortable trading both sides, either a retracement or a continuation. We're able to really, really dig into that, which obviously we show live on a weekly basis. Half risk price don't give you all confirmations to know if the direction is going to reverse or not. Yeah. So you'd have to wait for those confirmations in terms of price, maybe like respecting this fair value gap up here, like maybe like this candle did, right? If the next candle here would have ended up being a bearish candle looking like it wants to target this, my attention would go to the rest of the fair value gap, the mid portion of this fair value gap, or even the lower portion of the fair value gap, right? So again, all of this is this subject is all encapsulated under navigating, when price is trending and hits an opposing PD array, what's the thought process behind counter trend management, right? Because that's part of trade or trade like directional narrative, right? Or narrative management, right? So yeah, that's another pretty advanced topic, but one that is absolutely very, very important. Hopefully all this stuff is making sense to you guys. Tony said he uses micros and make out better. Yeah, that makes sense. Again, Tony, you're a beautiful example of independent thinking, and I love it. Of course, I share my opinion. I show my own engagements, the efficacy behind what I do live, so you guys can, do what you will with the information. There's going to be some stuff that you personally want to do in your own way, and that's totally fine. I want to make sure you guys do consider when it comes to risk and psychology and just the processes that I show. I just want you to consider the things that are shown, consider the effectiveness, and then you'll pick and choose what you're going to use for you, because I'm not going to personally shove you into a mold. I'm just not going to, because what I use in certain circumstances may not be something you're comfortable with. Maybe you're not comfortable with trading counter trend ideas. Okay, that's totally fine. You could just use it to frame out when price is going to get back in line with the narrative again. Then you can look to engage. There's nothing wrong with that. There's absolutely nothing wrong with that. Like Tony said earlier, you don't need to take a trade every day. Okay, you may want to, especially if you have less than 2 years experience, and we all do. We all want to get on the chart, get up here and make some money. It's a commonality behind us all. Okay, but again, we're not trading. Maybe this is different for you guys, but I didn't start trading to have to trade all day long, every single day, nonstop, be at the chart 10 hours a day. I did that for the first 2 years. It was exhausting. I'm grateful that I did do it, because it put me on a proper trajectory to learn and really get me some valuable experience that would have probably taken me a lot longer if I didn't do it that way. But again, me looking back now, it actually wasn't fully necessary. For me, I feel like it was. But for most, later on, past 2 years, the goal should be to trade less. Less is more. You hear that all the time, but people don't explain why. Well, the less trades that you take, the less risk you have, right? The better your analysis gets, the more accurate you should end up being. So the accuracy will make up for the need to want to trade all the time. It'll take you away from it, because that eventually certain things have to take place in order for you to trust the move, right? Like for price to want to continue going higher after it's expanded like this and hit an opposing PD array, I require it to want to retrace into a logical level before I'm looking to buy again, right? And if I decide to trade into this as my bias for that day, so be it. Right? That's something I've grown very, very accustomed to in terms of navigating both sides of the market. And again, the things that I talk about, the things that I give you guys in terms of teachings, it also shares that perspective with you, so then you can, if you feel comfortable, eventually either use it as an entry framework, right, or a narrative framework, or you can use it to just set up a move that kicks you back in line with the trend, because maybe counter trend trading is just not something you're comfortable with, which may change eventually. But again, there's nothing wrong with not taking counter trend ideas. You just want to make sure that you're understanding the bias and narrative, though, so that then this concept we've been talking about can help you get in line with when price is going to kick back in line with the actual narrative. So yeah. Before we move on, does all that stuff make sense so far? We spent a good amount of time on psychology today now, and now at this moment, for the last couple minutes, we have spent time on counter trend trading and just the overall perspective on that, because Adam graciously shared an issue he had with us, which I'm grateful for, that I'm sure is going to end up helping all of you guys or anybody else that watches this that may deal with the same problems. That's why I encourage you guys to share your issues. And Tony and Adam, I'm grateful that you've done that today. So again, before I move on, does the counter trend aspect of things and these perspectives I just talked about make sense to you guys? So let me know in the chat, and we will bounce back to the overall analysis. Yeah, okay, perfect. So we were rudely interrupted by the stupid technical issue. But so when you go on these time frames on this chart, this is where we start. We go news, then to the interest rate markets. We have the monthly high, monthly high, and previous week's high. Okay, so if this monthly high is going to end up being the target, if this bullish order block is going to end up being the catalyst that pushes price higher, if this up wick here is going to act as support, as I would anticipate it to do, if price is going to move higher, we have this wick, the quadrants, and then we also have the previous week's high on our way there to the previous month's high. Okay, that is what I'm focused on for now. We have the volume imbalance in here, which is also a new week opening gap. I'll leave that for you to go mark off and analyze on your chart. We could see those levels there. We have this up wick, we have this order block, and then we also have another volume imbalance down here / new week opening gap. So as long as the middle portion of this order block holds, I will continue to want to seek buy side liquidity. What we just labeled there are 3 PD arrays, 4 if you want to include these lows as PD arrays too. Right, so volume imbalances, order block, the wick, the midpoint of the wick. If these levels stay intact, which I assume they will, unless obviously we get a displacement below this low, this getting violated will be my deciding factor as far as whether this buy side delivery is going to continue more long term or not. Unless that's proven incorrect, I'm going to continue to want to seek buy side. Buy side target overall hopefully can end up being the monthly high. And then before that, we got the previous week's high, and then we got the wick quadrants. Those are my upper range targets from that perspective. We do have an order block here. We have relative equal highs up here, right? So again, if we can end up seeing a displacement back above, this order block, respecting that weekly bullish order block, which I will place a marker on so you can see that, just for completeness sake. Weekly order block. Okay. So we got the weekly order block, and then we have the wick here. So I'm gonna clean the chart up in a minute. So I'm gonna take this off. It's unnecessary. I'll keep that there. This monthly volume imbalance, you can see how important the monthly perspective is. We talked about this all throughout: the breaker delivery, the wick, fair value gap, overlap delivery. Again, if you are new here, you want to definitely go and observe what we were talking about in here, because again, we were on point with this delivery again, per usual. Okay. Again, if you don't believe that, spend some time here and go watch some of the other videos, and then watch how price has played out and done exactly what we've wanted it to do based on the things we employ here. But yeah, so again, the midpoint of this wick, the high, right? Just the whole upper portion of the wick, the order block, and the midpoint, plus these volume imbalances are my lines in the sand. Narrative adjustment wise, what would change us from going higher to being bearish? Like overall, for a more long-term view, would have to see this low get violated, because then we would have this order block, fair value gap, swing low, and the up wick / breaker being violated as well. So that would change my interest from this going higher, seeking the monthly high, to then seeking further sell side, maybe even eventually targeting these equal lows here. This sequence of events taking place, breaking this low, just to encapsulate everything, would get my attention to want to seek these relative equal lows. And think about it. This is a pretty far target, right? And if we're able to get in line with that, we're able to have a bias and narrative for quite a long time. Mind you, Pratik, so I'm assuming you're kind of new. So the reason we're spending a lot of time on these assets here, which we have one more to look at before we get the currencies, then DXY, or actually we'll do DXY first. But yeah, so these assets I'm spending time on here get us to an assumption as far as what DXY is going to do, because this asset specifically is positively correlated with the DXY. So what this asset does will dictate what the DXY does. What the next asset I'm going to look at does is it impacts what the indices are going to do. So that's why we spend time here early, because this is what will build a narrative for what happens on the DXY. Okay? Because you can't really reliably identify one asset if you don't become aware of what assets influence the other assets, right? Or your asset of choice. In this case, you're mentioning the DXY. Well, there's back-end assets that dictate what that's going to do. And if you want to trust in whatever you think DXY is going to do, if you want to have deep clarity and confidence in whatever DXY is going to do, rather than just guessing and assuming what price is going to do in DXY, you're going to want to spend time here and really get comfortable with the interest rate markets. In this case, the bond yields, and for the indices, it's going to be the bond market. So yeah. This basically encapsulates what these other two are doing. Looking at all three of them at once, obviously we want to make sure we're keeping tabs on any type of SMT behavior. We can see that there is a slight SMT here. If we look at the high over here, we have a higher high and we have a lower high. So again, if we get a displacement below this low, given this SMT is here, I'm even further confident that we will end up targeting the monthly low. For now, though, we are going to try to anticipate, seeing this hold. We're going to keep tabs on the fact that there is this SMT at the highs there. So again, if it does give a displacement down below this swing low, we know what the vibes are at that point. Okay. So there's no specific. Oh yeah, well then, Patrick, you're gonna have to watch the replay, brother, because I got we have a process here, and it is what it is. Appreciate you hopping on though. But yeah, so Adam, in terms of short-term trading, you could use the 2-year, but there's kind of a reason why I have these three. This encapsulates pretty much every single way of trading. There's no specific yield market or bond market that's specific to a style of trading. You definitely want to keep tabs on these as a whole, because I'm assuming by short-term trading, you mean you're a weekly range trader, right? You're not aiming for minimums, right? You're looking for a little bit bigger move that's going to play out for a little longer time span throughout the week. Sometimes 2 to 3 days holding price or holding an entry. So again, looking at it from this perspective is just fine. You don't have to look at any particular time frame, because everything as a whole here, I know this is a 30-year, but everything as a whole works together for every style of trading. Okay, so definitely, you don't have to think that there's any. Right, you, my friend, have earned yourself a timeout. So yeah, you're gonna have to oh man. Entertainment, appreciate you. But dude, it's totally insane. So yeah. I hope that made sense, Adam. But yeah, that pretty much encapsulates our analysis on this. So again, we're watching this low. If it gets violated, that'll turn us to these lows. Otherwise, we're going to continue to want to see seek higher prices. Okay, so now on to the bonds, which again, for those that are new, helps identify what's going to take place in the indices and the foreign currencies as well for those that trade currencies. Okay, so yeah. Looking at price here on the weekly chart, let's just kind of keep tabs on what the highs are doing. So the highs here, those are all pretty much in sync. We have a monthly fair value gap. So you see all the work that it's done in there. Notice the midpoint of the monthly fair value gap. Again, we've analyzed that for a while now, and obviously there's a lot of work to happen inside that monthly fair value gap. So, now we're seeming like we want to slightly get below it. I don't necessarily have the utmost confidence that is what's going to eventually, carry on. Okay. We're going to have to see, at least for this market, it's a lot less obvious than the other ones. These have relative equal lows down here and a very clear fair value gap that I've been looking at. So I'm somewhat interested in trying to see if we can get down to there. Again, this will very much impact what the indices are going to do. But again, over the last 4 months, there's been a pretty strong cracking correlation overall in terms of what is taking place with the bonds versus the interest rate markets, the bonds and yields versus the indices. There's been a slight cracking correlation there. It was there a little bit for the yields and the DXY, which again, because the yields dictate what the DXY is going to do. So that's been something that we've had to push to the side and just basically analyze technicals and other elements in our analysis to identify. Last question, bro. How many periods do I put in the fractals? So I just, in terms of periods, let me see. In terms of periods, let me see. If it'll pull it up, I don't. Okay. Let me see what you're talking about real quick. I don't know why it's not letting me pull it up. In periods. So this is my overall settings, I guess you could say. Put like 8 candles back. It does all of them though. You know what I mean? And I put three fractal little. It's a 3 bar fractal, not 5 candles. It's three candles. I don't know why I just went blank right there. But yeah, so put 3, put 8. Right. This is what I use. It does enough, right? The main point and what we're looking for is to identify the 3 bar pattern, because that's an actual fractal. the 5-bar pattern, what ICT has mentioned about that, if you identify a fractal pattern because of 5 bars, you're going to end up being late to the party, and you're not necessarily going to be as accurate as you could be for identifying the fractals. Thanks, bro, and sorry for... No, Adam, please don't say sorry about that, right? I encourage you guys to ask questions. That's one of the main reasons why I'm here on Sundays. It's not only just for me to give you bias and narrative, which a lot of people come in demanding for me to do, because they're going to hate this channel. This isn't a place for them if that's what they want to see. If they're not here to learn, they can go watch whoever else. No hard feelings. Okay. This is a environment where I'm cultivating a place where students can ask questions, ask a person that is honest, that's transparent, that shows that they can do it real life, like in live price action, and has a bunch of people behind that in the last couple of years that have succeeded in one way or another, and have developed clarity. It's not only behind my paywall that I'm willing to give some very valuable information. Of course, the ones that are behind the paywall get more support because they're investing in me to invest in them, and they're proving that they're serious. Because most people, as you guys have seen, some people on YouTube are absolutely unserious, and very, I'll be nice, okay? It's very undesirable, I should say. So that's the main reason why that's the main reason why things are set up the way they are with me. But I know some do take it serious, so that's why I offer things on YouTube as well. So don't ever be worried about asking questions. No question is stupid. No question is not worthwhile. So blow me up with more questions. Okay. But yeah, so again, this is a market I'm going to put to the side. We do have this breaker here. It's just basically the opposite view of what was taking place here in this asset. So, and again, just a review for those that may be new watching the replay or hopped on recently. This impacts what the DXY does. The bonds impact what the indices are going to do. So, yeah. All right. So, guess that didn't make the point. So, there you go. See real quick. Guess I did make the point, so maybe that will. So yeah, you guys hopefully can make sense of that, right? So the yields dictate what DXY is doing, the bonds dictate what the bonds are going to do for the most part. Because the crack correlation's there, we're going to put them to the side a bit. The yields, it may potentially fall in line, but again, this is again a very important thing to operate within, and you want to make sure that you are focused on that. Okay, so on to the currencies. Okay, so we're going to look at what the foreign currencies are going to do. Okay, so we've been anticipating. I mean, that's disgusting. It's been pretty gross. Ahmed said, in seasonal tendency may usually decline for EU. Do you think we have turning points for higher prices now? So, Ahmed, have you been here for a while, or are you a new viewer on the channel? I just want to get a feel for, whether you've been here. Because we basically have been talking about this for months. This whole entire move, lower and higher, we've been able to get in line with. We have been identifying price going, lower to go higher because, again, as I've talked about, bias and narrative are totally two different things. And narrative doesn't change on a day-to-day basis. Just because it retraced and had consolidation doesn't mean that I'm sitting here thinking, oh, now we're going to seek sell side because it stopped. Or, oh, it took the high here, so we're going to be bearish now. That is in no way. New viewer. Okay, well, Ahmed, welcome. There's going to be a lot of things that you learn here. And I'm grateful for your time, as I am with all my students. I just ask that, you be patient with me, and, always ask questions. I appreciate the questions you ask. And this whole process, although it may be long at times, it gives you a very deep understanding rather than me just coming in telling you, hey, one thing is bullish or bearish, and with no explanation why. Because anyone coming here asking me for a bias or a narrative on something, and me telling them, that's just like me handing you a drug. Okay, like here's get your fix for today, right? But what I do is I teach how to do it yourself. And obviously, being able to shadow me on these calls, sometimes, again, some people won't have patience for it. And, that's totally fine. You know what I mean? But, what we teach here is insane. Okay? Not to toot my own horn, but, just the reviews and things that people have said about the process we employ, which obviously is inspired with ICT concepts. I'm a 6-year veteran using ICT concepts. So, there's a lot of wisdom that's placed in it. But the reviews, which I'm assuming the review from you is also going to be very similar, have been phenomenal. People like Tony, for example, in the chat, many others, some that haven't had a chance to come today, but many others, just from spending time here on YouTube and being with me week to week, has made them have clarity and be able to do it on their own, so they can go and pass funded accounts, which Tony is also an example of in the chat. And if you go on my Instagram, you could see all the testimonials, hundreds of them, from people both here on YouTube and in my private community. Just from dealing with the actual information, rather than me just handing them a bias and narrative. Because again, that does nothing. That's just like me showing you a magic trick, doing it in front of you, and not teaching you at all. It's like entertainment, and you won't know just off me telling you the bias or where price is going to go. You won't know if price changes. You won't know the thinking. So, a month from now, or even a week from now, you'll still be thinking like, okay, I don't know. So let me go make someone else think for me again. I'm trying to help you learn to think for yourself, and then, come here maybe to amplify or, maybe use as a resource to further, justify whatever your concept is that you use, or your process, to help you be a better trader. I'm not here to cultivate signal junkies. I absolutely despise signal junkies. Anyone that just wants me to give them a trade, this is not a place for them. If you're here to learn, though, and you want to be successful, you want to help figure out how to change your family tree. If you want to learn a skill set that can be with you forever, that you could pass on to your family, your kids, and anyone else, this is a place for you to call home, along with ICT's channel as well. I'll never take away from the value he provides as well. Sometimes his message, right, the way that he portrays things can be a little difficult to understand, which is totally understandable. It was for me. But then, of course, that's where channels like mine come in to help you make sense of what he's teaching without taking away any of his flowers that he deserves, any credit that he deserves. I don't take any of that away. I just share the way that I view the concepts, and it's a little bit easier at times, so you said in terms of seasonality, it may usually decline. So seasonality, I'm glad you asked that question, because this is a good lesson I've talked about before as well. But for those that don't know, when it comes to seasonality, when you're identifying seasonality, which we're going to do a full analysis on at the end of the month, but when you're viewing seasonality charts and the actual market is, in this case, bullish, but in the seasonality chart, you may see that price looks like it usually should be bearish over the last 20, 30 years. That'll generally give you this response. Okay? Bearish seasonality in a bullish current market environment will generally result in a time where price is going to retrace. Okay? We can see that on full display here. Okay? That hopefully is an aha moment, right? It's beautifully showing it right here. Price has been extremely accelerated to the buy side for the currencies, and there's a bearish seasonal tendency, like you mentioned. So with that being the case, we got to look at what the actual current market condition is. Is it bullish or bearish? Because we've been extremely bullish, that bearish seasonal tendency should be looked at as a retracement moment throughout the year. Unless, of course, we were to lose our PD arrays and our 3 PD array validation and validation principles, right? That would change and further cement the fact that bearish seasonal influence is actually in price changing the narrative. Otherwise, again, if it continues to be a bullish market environment currently, and when we're looking at the seasonality chart where it's showing us a bearish seasonal influence, if the current market conditions going against that, then that bearish seasonal tendency is going to be looked at as a moment in price where a retracement will take place. And you can use that thought process to justify a draw into this fair value gap, which we anticipated weeks in advance, 4 weeks ago, right? You see this markup here? This has been here for the last 4 Sundays. Well, 3 because I didn't hop on last week because of Mother's Day. But yeah, that's a justification or a back end reason why I've had this arrow here from this candle over here. Okay, so Ahmed, I hope that makes sense. Again, I appreciate the question, and I appreciate you being a new viewer. Don't forget to subscribe to the channel if you're not subscribed. A lot of people watch and they're not subscribed for some reason. Sometimes I forget, which I understand, but I just wanted to give a friendly reminder. And for the most part, you guys have liked the video throughout the day, so I'm grateful of that too. If you haven't liked the video, definitely do so, and share with a friend that you think can benefit or bring value to the conversation. Also, that's another thing that's greatly appreciated here as a thank you to me for the things that I do, if that's something you feel inclined to do. So yeah. So again, Ahmed, I hope that makes sense, brother. So yeah, and every month we do a seasonality review. So hopefully you'll be here for that as well to get that whole process and the weekly analysis process. So yeah, I believe that again, this is still got a likelihood to want to go higher. We're going to have to see how this bullish breaker is going to be. This is a 3-week bullish breaker. Okay, so again, we're at a very high time frame. It's also a quarterly bullish order block. Okay, we haven't really closed above it, so it's kind of suspect. It's kind of just purging out liquidity. We are pulling back into this 3-month order block, which that's what the quarterly order block is. We also have a quarterly fair value gap in here. I'm not sure if I have that outlined. I don't. Let me actually put that up real quick. Because yes, even though it is a higher time frame, it is still important. Okay, so it's a quarterly fair value gap. So that's all we really need from that time frame. So again, we have this quarterly bullish order block merged with a quarterly inversion fair value gap, which is also inside of a 3-week breaker. Okay, so these are references obviously for dynamic support and resistance, and if price is going to continue going higher, right, if we're looking at this weekly chart, it's going to have to stay, in my opinion, stay above this 3-week breaker. Okay, and then we also have an inversion for value gap here. Let me actually clean up some of this up here. Keep the monthly high. Keep that monthly high. So again, we're going to have to see for the currencies to change overall from bullish to bearish in a long-term capacity. For me, for the British pound, we have the volume imbalance, we have a fair value gap, and we have the middle portion of this large wick here. Okay, so we want to see if it can stay above the midpoint of that. And if it doesn't, say it starts to displace below these levels, my attention goes to the low. Okay, and that would be supported by a bullish DXY if that was to take place. Okay, this currently, for this to continue going higher and seek this fair value gap, which is this one over here, it left it open with relative equal highs, so that's pretty convincing that they're probably not done up there. But If this is going to go higher, we're going to have that supported by DXY giving us a bearish delivery. Okay, so yeah. So these are some of the important levels that I'm identifying, right? So we got this volume imbalance in there. We have this low, or this high of this candle here, which is a weekly high. Okay, so price is now dancing around that. Okay, again, we have this 3-month order block I'm going to keep my eyes on. And it's kind of the same with this, right? If we get down below this weekly fair value gap, which we already have, which is, you know, not necessarily the greatest sign for price to want to go higher, it still might, because, you know, this wick middle portion, the fair value gap, which obviously we've kind of blown past, and then of course we have this quarterly fair value gap. I can say that if we break the midpoint of this wick here, that's going to be significant. Okay, it's going to be a signal that, especially if we see DXY go higher, it'll be a signal that we may start to change from this rampage higher in the currencies to then start to, you know, potentially seek potential downside objectives. Again, this is a if-then scenario. If price continues to respect these levels I've just mentioned and starts displacing, and say we get above this weekly fair value gap again and this volume imbalance, so on and so forth, if it gets above that, then obviously again we have the wick here and the high. Each high appears available as well, and then you know, whatever's up here, like this high, so on and so forth, we can end up targeting those things. But again, if it breaks through these levels, this middle portion of this wick, the middle portion of this wick, if we get below this quarterly inversion fair value gap, and if it's, you know, can prove that it wants to reject from there, then again our bias or narrative will change from bullish to bearish. Okay, otherwise, if it stays, we're keeping this intact, we're going to keep looking for price to give us reasons to want to buy. Okay, so hopefully that is in a nutshell clear in terms of what we're looking for. Before anything takes place though, we have this weekly candle. So we got the weekly low, the previous weekly low, previous weekly high. So before any of that takes place, those two areas in price are going to be the first targets the week is going to look to take out from a weekly perspective, right? So the next weekly candle, yeah, it may want to come down into here overall, right? Or it may look to come up here overall. Before that takes place, it's going to still have to break through this previous week's range, this low and the high. So that's a very down and dirty, easy way to identify a draw on liquidity. Okay, the most near-term liquidity, which is going to be the previous week's high and low, previous month's high and low, and previous day's high and low, depending on, you know, whatever time frame you're operating within or style of trading. You said, why that level exactly? Which level are you referring to exactly, brother? Adam, just let me know what level. The wick? The midpoint of the wick? Is that what you're talking about? Is it the red one? Talking about this, or are you talking about this? The wick consequent encroachment, or the quarterly bullish order block? Yeah, that order block. So this order block is from a 3-month time frame. Okay, so my analysis spans far and wide. Okay, I am rooted all the way up in even these time frames. To start the year, I was rooted in this monthly or this yearly time frame, and we were able to identify this low, tapping into this yearly order block, and then being able to navigate the overall rejection from that order block. So that's not going to be everyone's cup of tea. I like to kind of mix it in there just for completeness sake, so you know that I'm not There's no back end things that I'm hiding. You know, it's not going to be everyone's cup of tea. You know, you don't necessarily 100% need it if you don't want it. You could just operate off the weekly and daily. I have some friends that only operate off the 4-hour as their higher time frame daily chart. But I'm a very complete, thorough, you know, every corner covered type of trader, because I had struggled very, very deeply with the why behind price action. And it was a huge barrier that I had behind, you know, my confidence in particular ideas. So as a result of that, I figured out, you know, where is the root of everything? How does everything work from time frame to time frame? And why can I trust particular things taking place for narratives on higher time frames? How can I know almost certain that you know, the bias or narrative is going to be correct? And you know, the things that I operate within, the efficacy to them, and the strength behind the analysis is proven by the 75 to 90% bias accuracy rate that we've had over the last 3 years live in front of people. Now, it's not just me, you know, spouting a random thing. It's something that has, you know, been tracked for the last 3 years live in front of people. And those that spend time here can see that statistic come to life. You know, so it's not even a question. You know, and a lot of that comes from me rooting myself in these higher time frame ideas, and that's how I'm able to stick to a narrative long term. And you know, for the most part, obviously, that process very much helps me when I'm navigating the more day-to-day price delivery. And then, of course, you know, we know how to map out liquidity, the specific areas that are super important, which are reliable. You know. But yeah, that is why I have that mentioned there. It's only mentioned. It's not necessarily a be-all, end-all for now, because if we look at the 3-month, it has not really closed above it. So if price doesn't close above a order block, it's not necessarily an active order block yet. Generally, it has to close above. I mean, I guess you could kind of make the argument that it pretty much did close above it. So yeah, now I didn't even notice that, but now that it's closed above it, even that small amount, it's an active order block. You know, and if this was to fail, say that, you know, this candle does end up, you know, closing like this, but the next candle for the next quarter, which will be the third quarter, ends up printing down and violates the low middle portion of this order block here, right? Well, that would mean that, you know, we may be in jeopardy to target the further downside, and we may have a very, very bearish rest of the year, right? So you could see this perspective is analyzing things from like a massively high time frame, so I can essentially dissect what the year's narrative is going to be. You know what I mean? And again, this isn't necessary. Oh, appreciate the sub, brother. Man, I'm grateful that you found enough value to subscribe. Grateful for that. Appreciate you, Freddie. You the man. But yeah, you know, essentially, the process that I'm kind of sharing with you guys. Again, I don't talk about it a lot because, you know, most people, you know, they're not here to actually learn. Okay, and you know, aside from that, a lot of people aren't going to spend time on these upper time frames. But I am someone that wanted to figure out as much as I could. Okay, and I have now gotten to the point. I'm not close to where I want to be, but I've gotten to the point in my analysis where I'm even able to map out what the years are going to do. If not the year, at least quarter to quarter. So imagine if you can get a bias or a narrative for 3 months and have trust behind that 3-month bias and narrative based on these concepts that are obviously effective on, you know, even the 15 seconds chart. I mean, you can imagine how powerful that'll be throughout the year as you're trading and trying to justify a particular direction. You know, quarter to quarter, you'll have a foundation as far as what the narrative is on these very large time frames, which are the most important, because this is where big money's playing the game, because they're playing long-term retirement, you know, style, you know, gains, right? 15 to 21% a year, and they're aiming for 5-10 years down the line, maybe further. So that's why these time frames are very, very valuable. But even for us on this time frame, year to year, this stuff becomes very valuable in the lower time frames too. For day to day, week to week, month to month, if you have the actual upper parent time frames giving you insights that you could then go and justify further on the lower time frames as well. Okay, so it's so important. That's why waiting is important. Tony, you're absolutely right. And you expressed something to me earlier, that issue. Let me go back and pull it up real quick. The impatience, that impatience is combated when you understand the importance. Although it takes time for these higher time frames to work out, once you understand the importance of these and how this is where the real games are played, you're then able to be more patient, because if you go in engaging and you're not aware of what these higher time frames are doing, you're trading blind. You're opening up the door for even more risk because you're not aware of things. Now, again, it's not required that you figure out how to navigate quarter to quarter, year to year style of analysis. It's not required, but it's definitely helpful. And being a trader that aims at full-time trading, I mean, I would imagine that you want to get as much clarity building tools as you possibly can under your tool belt. Mind you, that has nothing to do with execution. This has to do all with planning and structuring your process in terms of identifying where price is going to go. So then you can, potentially put a monetary value behind whatever it is that you're going to engage, and you can rely on it. Okay? Because that's the thing. Full-time trading is difficult. It's not something for the weak. Just because someone watches the 2022 model and has like a year experience, that alone is going to take you probably a year or two after you've learned the concepts. And then your risk management and mindset, I mean, who knows how long that's going to take for from trader to trader. It's different for everybody. And then transitioning from making trading your main income, I mean, there's a whole long journey that has to be grown into as you do that as well. That's why ICT says you want to have at least 2 years saved up of your living expenses. Then you want to have at least 50 to 100K account that you're reliably able to prove to yourself that you're able to trade effectively. Then, per ICT's advice, you're ready to be a full-time trader. Now, again, most people will hear that and they're not going to do that. They're going to try to speed rush through it, and it's not going to be that demanding for some. A lot of I know some that can get away with 50 to 20 to 50K and be a full-time trader, because but the thing is, the experience behind them is massive. The mindset behind them is bulletproof. They've been through the storm before. And they're well seasoned. It's like a new recruit in the military versus a hardened 5-star general that's been there for 25 years. Like, the mindset is going to be so polar opposite. Like, it's not even relatable. It's the same when it comes to traders that have been through the struggle, been through drawdown for years and years and years, critique themselves and focused on the right things for years and years and years, versus someone that has 1 year experience, learned one model, trades it only on demo, and has never even proved that they can be consistent on a month in a demo, let alone full time. The difference is so massive. And I hope me just laying that out shows you kind of like the dilemma that most people overlook, right? People overlook these facts because they're uncomfortable. But again, I'm not necessarily here to, make you feel comfortable. I'm here to try to help you feel comfortable in your own trading and get clarity. But again, there's a lot of things, just like what I just mentioned, that are battles you're going to have to overcome eventually. It's unavoidable if you want to make this a full-time trading endeavor, or you can make it a side income that, maybe eventually as you work towards that main goal turns into full-time trading. But by that time, you'll have so much experience, and you'll have, made the right decision by, keeping an income coming in, and then, eventually transitioning. Again, these are realities that people don't like to hear. This won't sell a course. This won't sell someone a mentorship, right? This won't make someone join my private community. Some it will, some it won't. But so be it. Okay. There's a lot of people on the internet that can blow smoke up your ass and sell you some fake course that they don't even prove, lie to you and make you feel good off of lies. There's more than enough of those people, but again, this channel's meant to somewhat combat that and do my part to try to change the culture in trading, at least from our little corner of the internet. But you come here, you want the real, you're going to get the real, and you're going to be better for it. You're going to be wiser for it. And, it's going to help you get to where you're trying to go if you accept it, if you, internalize the things that may seem uncomfortable, because it's good medicine, like ICT says. And I'm grateful for those of you that do stick around, knowing that I'm being honest with you, transparent with you about these things, that it's going to take some time. And, you want to be patient with yourself and work on these other things. Keep your goals high, but again, be reasonable. Okay? Be reasonable. Think about it. If this was easy, and it was easy to become a millionaire or be a full-time trader, don't you think that every single person on the planet would want to come in and push some buttons and quit their job? Don't you think that's what everybody would want to do? There's a reason why there's only like 0.2% of the population in trading specifically that can even be profitable, even in a funded account. Have you seen the statistics for funded accounts? It's worse than normal trading in a live account. Just the normal statistics as a whole. Funded account challenges and just managing funded accounts have a more high difficulty rate and a deeper failure rate than just trading in general, the whole industry as a whole. And it's like that on purpose. But again, if you understand the mindset that I share, some of the stuff that I've talked about today as well, you are in much better of a position to succeed, even in that type of environment. You know what I mean? Confidence is key, Adam said. Absolutely. Consistency leads to success. Absolutely. And mind you, consistency in many things. Consistency in your thought processes, which most people don't think about. A lot of us are very inconsistent with the way that we talk to ourselves, the way that we view the world. Our day-to-day, like I said earlier, the drill I want you guys to all do, for those of you that stuck around since then, or if those of you that are new want to do this as well, you should. Get a piece of paper, mark off all throughout the day for a couple days or even a week or more, how often your negative thoughts are coming into your head. Outside of trading and in trading, when you're in a trade, what's the first thing that comes to mind? Be honest, okay? Because this is a pointless drill if you're going to kind of sugarcoat it for yourself because you want it to look better to yourself. You don't have to show nobody. But, if you just want to try to convince yourself by, falsely, giving, fake thoughts about these drills, doing it in a fake way, but, you want to be honest, get a piece of paper, write down, tally up every single time, that you think negatively. Again, like I mentioned earlier, my discoveries from that were insane. Okay. 500 plus negative thoughts, 567 exactly, negative thoughts in a day. Okay, that's insane. That's so high. Negative. So it was no wonder I was depressed all the time. It's no wonder I was struggling with trading and many other things and just being down on things because the common thing was just negative. If I didn't acknowledge it and do something that highlighted it because it's a subconscious thing, I would have never been able to adjust it. And we all will still battle with it because we're naturally designed to think negatively because of the danger factor and our brain's trying to protect us. But, we got to convince ourselves that there's nothing to be protected from, especially if we have rules. And again, that drill is going to be very eye-opening to many of you. And if you struggle with impatience, like you lack confidence, even if you just have issues like depression sometimes, this will help you with that too, okay? Because you'll highlight what's really the problem, because life's going to happen to all of us. It's not what happens to us, it's how we react to it and what we do as a result. that either makes that negative thing a impact on us or just a lesson that makes us stronger. And that is more apparent in trading than anything else, in all honesty. Okay. So yeah, definitely use that. Just wanted to run back to that because, again, it's that important. It's very helpful. And, those of you that feel open enough to share that journey with me or that experience with me, I would be very, very excited to be able to hear about it. And, maybe we could have a conversation about it as well. And if you're in my private community, definitely send it to the private community. We'll hop on a live call and we can have a discussion about it as a group. I would love that. So, yeah. Consistency, patience, and faith in God. Damn right, Adam. Absolutely. Other way around. Let's say God, consistency, and patience. How about that? But yeah, nonetheless, I completely agree. 100%. But yeah, so I hope it makes sense as far as what we've talked about with the bonds, yields, and now currencies. So these are some of the things that we're looking for, we're waiting for. Yeah, so the private community it's obviously a private community. It's just it's been a way that, for one, I've been able to weed out those that, don't want to waste my time, that are actually serious, that are in here for the long haul, that really want to, or need the support in a more like handheld way, more access, more content, private lessons, there's different, ways you can go about that. There's obviously a lifetime, which many have chosen. Cause I understand, my private community told me, like, you should make a lifetime thing, cause the fee is probably going to hurt some people, and they're probably not, if they want to be here forever, there should be an option for that. And, I took that into consideration 3 years ago and was like, yeah, you got a point, because I remember, again, I was homeless. Okay. And, if I could, get into a community like we've developed, get around people like, the students and, those that can actually help me in the community, I would have paid whatever I possibly could. And, the things that I put in terms of a paywall are cheaper than every single person on the internet, in terms of a person that's willing to give you their time, be a mentor, be there and actually help you and listen to your problems and actually spend the time rather than just throw a course at you, which I could very easily do. I don't feel that that's helpful. Other than ICT's course, there's nobody else that does anything remotely as effective. So even some of the people that I respect, but for the most part, most of the people that I respect in this industry, they sell their experience similar to what I do. I took that model, and I'm basically, giving my experience and opening up my time and availability to be there to actually coach traders in a more like secluded, more focused capacity. And that's why I don't run ads and I don't do all this stuff to promote it, to make it some gigantic community. Because, I want to be able to put time into everybody, and the goal here is to just get around those that really support the channel, that really want to succeed, and, want to invest in their future and get around, like I said, those that are willing to help them and can prove that they can be successful and try to pull out success from them as well. But there's a reason I don't run ads. There's a reason I'm not like on a crazy mission to become super famous. I could care less. If I can help 100 people be full-time trading, I think I've done my job for the trading community. And then of course I got the YouTube channel. I may not be public like this forever because, maybe, who knows? I like doing this stuff and I'm grateful for those that I meet. But life is life, and you never know if there's an expiration date on some of the things that we do. There may be an early expiration date on us in general, so who knows? But it's there, and for the foreseeable future, it's going to be there. And I have a free Discord. I also, try my best to have that type of vibe there too. But of course, the attention has to go to, or more so to, those that are willing to, really take this serious. And Adam and Tony, I'm aware that you guys are definitely those types of people. You're the type of people that my audience is aimed at, or my content's aimed at. You know, education is needed, and yours is definitely life-changing. See, and Tony, keep this in mind, everybody, okay? Tony is not even in my private community, okay? And we communicate on a regular basis, you know, and, you know, although he's not in the private community, I mean, he's just taken the YouTube stuff and really took it to heart, and he has changed a lot of stuff. I've seen from when he first started and started watching the content, what he shared with me, and he's just a wonderful testimony. You know, him and many others that you guys see pop here in and out and share their experiences. I have a great amount on just YouTube, and then of course in the private community, there's over 180 plus people that have crossed paths with me. Not every one of them becomes successful, obviously. It's just the way it is. Some people don't listen. Some people have improper intentions. Even when they pay, get into a private community, even when someone's proving to them that what's being taught is how they need to consider behaving and consider applying. But even then, you know, there's going to be some that can't be saved, and it's unfortunate. You know, I wish I could save everybody, but I just can't, you know, because some just won't listen. And, you know, this game's hard. It's very difficult. It's not easy. Just because I'm out here making it look easy doesn't mean that it's been easy and always was easy. Sometimes it's difficult in terms of identifying where it's going to go, because there's news happening, there's this or that, cracks of correlation, stuff that kind of throws the analysis off. But instead of me looking at it as, oh, this is too hard, too difficult, I just take it as, okay, well, this is a condition that my experience tells me was, or from the past tells me that, you know, it's going to be a little more difficult ahead of NFP, ahead of CPI, during those events, FOMC, rate announcements, you know, whatever the case may be. And I just take those times, instead of thinking like, oh, it's too difficult, I suck at trading, blah, blah, blah. I just take it as a reason to sideline, you know, kind of redirecting the negativity, like I was mentioning earlier, that could swirl around in our head to, okay, well, you know, based on what I've learned, based on the concepts, I know that I'm not supposed to trade every day. I know it's not required to trade every day. So when times pop up, instead of being negative, I'm just going to say I'm not going to trade. Totally fine. And I'll come back tomorrow, because it will eventually get better. You know, so yeah. You know, experience will teach you a lot. And you can't just buy experience, but you can buy time to borrow someone's experience. And that's generally what most of these top of the line ICT mentors, right? Mentors, but they're actually good, and I have respect for many of them. Jade Cap's one of them. He's amazing, solid individual, and a couple others, you know, that you know, are truly inspirations, you know, to this industry. You know, I can't wait to see how far they're going to go. I can't wait to see how far we go, because you know, we could trade with the best of them, given what I showcase. I mean, it's I mean, it's an undeniable fact that there's multiple savages in the making. You know, a lot that aren't public. I have 15 students that are not on social media, not in the private community, that just, you know, they don't want the attention. They don't want me to ever say their name. They just want to keep in close contact, so then they can, you know, have that experience of someone to always lean on if they have any issues, or just need someone to talk to about any issues they have, or you know, just reflect, you know, because eventually the students become, you know, very good. And so instead of a student, they become an equal, you know, maybe not exactly equal, but they become you know, like a colleague in a sense. And that should, you know, that should be the goal. It shouldn't always be putting everybody on an idol, right? ICT mentions this all the time. You know, you want to become your own idol. I'm here to help you. I don't want to be worshipped. Okay, just like ICT, you know, we believe in the same God. We have very much the same principles, and you know, I don't want to be an idol, but I do want to be a help, and I'm grateful that you guys have given me the opportunity to do that, either, you know, here on YouTube and especially in my private community as well, because it's been a wonderful experience, and you guys are amazing people. There's a reason that you guys succeed or continue to improve, because you guys are the ones that stick through calls like this all the way up until this time. You guys are the ones, and it shows in the things that you share. And it's going to continue to get even more amplified. And, the better you get, the more you update me, the more I'm going to give you your flowers and keep pulling you up with me. So yeah, you guys are much appreciated. Funded accounts. Exactly, 100K funded account, and I'm still going to work till I have revenues for everything. It's a process. Yeah, Tony, that's the perfect mindset. I'm grateful that you say that. Because we get caught up in this YouTube, Instagram, social media lifestyle, painting trading in a way that it's not, okay? It's just not reality. You may see someone pop off like an overnight success. People try to argue and say JCap was an overnight success, because he's out here showing all his stuff, and all of a sudden, like 2 years ago, he just exploded. He's now been trading for 15 years, okay? He's 36 years old, okay? He's been trading since he was 20. He failed for the first 10 years, literally, and he was in ICT's mentorship for years, okay? Who on the internet, if you made a poll on the internet, would say, yeah, you're going to struggle for 10 years, but after that 10th year, you're going to start getting better, and then the 12th year, you're going to probably be profitable slightly, and then, the 13th, 14th, and 15th year are going to be your best years. Who's going to sign up for trading? Who wants to trade if that's the game plan? Most people will be like, nah. In this time of life, they'd be like, nah, that's way too far. Oh, that's way too quick. No, it's too much. I'm too impatient. No. So you're saying that in 10, 15 years, you're going to look back and think, damn, I'm glad that I didn't even start to trade. Okay. If that could have potentially been the possibility, you're going to look back and be okay with that type of thought process, knowing what you see people do. Is that really something you'll be okay with if you put yourself in the future? I know I wouldn't be okay with that. I'd look back and regret the hell out of that. So guess what? I'm not going to allow that to be something I regret. So I buckled down and kept focused. And it's not going to take everybody 15 years to do this. But if it did, ask yourself, if it did, would it still be worth it to you? And that will tell you, plain and simple, whether this is something for you or not. I mean, even if you're 30 years old or 40, even if you're 40 years old and it takes you 10 years, you're going to be 50. You telling me that hopping on the chart, being able to trade and make a full-time income still wouldn't be worth it? Like, 10 years is going to come very quick. It's going to fly. And what you do today is going to be the fruits that you bear later. And again, it's not going to take everybody 10 years. It didn't take me 10 years. Of course, I'm not exactly where I want to be, but I'm pretty sharp. Okay. Not to toot my own horn, but I like the things that I do. I know my weaknesses. I know my strengths, and I don't put too much pressure on anything, and it serves me well knowing because I agree with my own evaluation. If it took me 10 years, I'm still going to be here. I don't care. I don't care if I'm 60 years old and it was to take place. When you're 60, you need it more than ever because you can't go to work. Most people are run down at that time. So it's even more valuable. It doesn't matter what age you are. It doesn't matter how long it's going to take. It's definitely not going to take you 20 years, even if it took you 20 years. You're saying that 20 years from now, if you're 30, when you're 50, if you can make 100K a month, it would not be worth it to you? It's even more important to you at that time. And again, it's not going to take that long. Some it might. But given what we have access to, the people that are available, communities like the one we have here, things that ICTT, come on. You think it's going to really take you 10 years? Unless you are just the most unteachable, unreasonable, undisciplined, not willing to change type of person, it's not going to take you 10 years. I put money on that. So honestly, yeah. It's the way it's this reality. Education. Yeah, I appreciate you saying I'm doing well, Adam. I try my best. I really do. And I'm grateful that you see it. 10 years before he's seen it. Yeah, Tony, I'm sure you're aware of that. I'm sure you're probably aware of him talking about that. You know, he's definitely a very, very good man. That's for sure. On top of everything else. This is my second year, Adam said, and I have a model back tested, and I just bought a 5K account. Yeah, no worries. I'm glad that you said you bought a 5K account, right? It's a 5K account, right? It's a very small one. So if you get hurt, if you lose funded accounts, don't think anything of it. You know, don't think anything of it. Look at where you can improve your risk. You definitely want to have a lifetime one, right? Like one that doesn't have any time limit. Because you want to be able, if it takes you 6 months to get that 10%, that's fine. If you think about it, the best of the best traders are only making, like I said earlier, 15 to 21% annually per year. So if you take 6 months to make 10%, and then it takes you another 6 months to make another 10%, bro, you are in a realm that 99% of people are not in. We're aiming for 2 to 10% a month. Because, I'm personally dealing with larger accounts, so that's all I need. And that's eventually what you're going to want to aim at. But, we're aiming at large percentages in the grand scheme of things, in the realities of trading. Warren Buffett makes, on average, 18 to 22% a year. That's all he aims for, a year. And he's a multi-billionaire. Okay, he's always been this way. He never tried to get big windfall victories. He probably did here and there. But, that's the goal. 15 to 20% a year. Some of us are aiming for 10% a month. That's like 100% in a year. That's like on levels that are unheard of. Like it's not even, it shouldn't be possible in the grand scheme of things when it comes to traditional trading mindsets and, how things are viewed traditionally. So if you can make 10% in 6 months, that is spectacular. While managing risk properly and not blowing your account, spectacular. It may not seem like it is, but I can tell you if you had $1 million account, that's a pretty damn big amount. It's like 100K, okay, already. And of course, it's kind of an unreasonable example, but it's this is the normal way people think about trading. There's no professionals thinking I'm going to make 500% a day, or I'm going to just do this or do that in 2-3 weeks. There's none of them thinking in high percentages like that. It's only people that are day trading that are uninformed, who are the same people that help those larger players get to their goals because their mindset is totally polar opposite. And that's why 90% of people fail in trading because of that discrepancy, because of the things we've talked about today in terms of psychology, the proper perspectives, proper mindset. But that's why people fail. It's not because trading's too difficult. It's just because they don't change things they're supposed to change. The way they view losses, the way they treat themselves, the goals that they set upon themselves. The expectations that are just beyond unreasonable for someone that's so new. And again, this doesn't sell you anything. Like, this isn't going to convince nobody to go join my private community. It's not going to... So it's probably not even going to convince them to stick around and watch these videos, or any other concept or content that I do. But again, I'm not here to blow smoke up anyone's ass and be entertaining and all this nonsense. I'm here to help you grow and thrive and succeed and see the realities. Because if you want to be a full-time trader, it's like you're about to go into the biggest war of your life internally. And you need the weaponry to be able to manage that. And if you don't want to accept the weaponry, which are most of the things that we talk about, so be it. The statistics are large for a reason. And a small amount of people succeed for a reason. So you can fight it all you want. You can go look for 5 minute this, 5 minute that, like ICT talks about, and people that don't know what the hell they're doing, but they'll sell you an indicator. You can go follow those shiny objects. But this is not a game for the weak. It's not a game for children who think like children. Some children, think very maturely. Like, for one, my brother. He's not even 21 yet. But he's a very mature individual, and very focused. So it's not like that for everybody, but you got to behave a certain type of way and think a certain type of way, because this is war. This is not a game. Oh, Adam's 19. Youngins. So yeah, Adam, this is the time thing I've been talking about, especially relates to you, because you could spend the next 10 years failing and you're going to be 30, not even 30, you're going to be 29 years old, bro. Literally. You're going to be my freaking age, dude. Like, bro, it's going to be crazy, bro. You and my little brother. Like, it's crazy, dude. Like, you guys have no idea how fast 10 years is going to come. I thought I had forever. 10 years is going to fly faster than you could have ever imagined. You're going to think back on this conversation and think like, wow, he was frighteningly correct. Because, I don't know, it just speeds up. Maybe it's because, that's generally when people start to work and life becomes a lot busier. Some go to school, some do this, some do that. So things are just constant. The days are just flying because you're trying to get things done. Start work at 14. Wow. I started at 16 because that was like the lowest I could go in America. It was the lowest we could go, at least where I lived. Let me go back to my buddy. Did an interview with him and his story. Your buddy did an interview with Jade Cap. That's amazing. That's amazing. Yeah, he is amazing. He's an amazing individual, and he's had a rough life. His parents, dude, I can't even talk about it. Oh, it's rough. But he's overcame, and he's where he's at. So anybody can do it. You just got to really have the right mindset. I can't even talk about his story. It's man, it's rough. Adam said he's in drawdown. Following my risk management, I take 0.5% loss in EU, then I go to 0.25%. Yeah, perfect. Yeah, perfect. Beautiful. Beautiful, beautiful, beautiful. Tony said 4 100K accounts, 10% a month. Yep, 40K a month. You don't even need that, Tony. Go down to 5%. 3% a month across 4 100K accounts. 10K a month is phenomenal. It's more than anybody else makes. Majority of the United States. Let alone other countries. Like, dude, you're going to live like a freaking king off 1% a month across 4 accounts. I mean, it's just spectacular. 10% is definitely a good goal, though. And, let me see. Yeah. Oh, nice. Tony, you're 50. Wow. Amazing. Amazing. See? The spectrum in terms of students like that come to me is just, it's amazing. It really is. It's absolutely amazing. Adam said he was working with his dad, so all... Perfect. Yeah, Adam, man, you guys are so young. You and my little brother and a couple other students. I have 20-year-olds, 25, 23, 27-year-old. I have a 62-year-old. Now I got a 50-year-old. I have a 45-year-old. I know I'm forgetting some. But, yeah, the spectrum is just unbelievable. I have 3 30-year-olds. Yeah, it's doesn't matter what stage of life you're in. This stuff is incredible. It really is. It's worth every moment. It's worth you spending the rest of your days on this beautiful place we call the planet, God's green earth, trying to see how far you can take this. It's not worth quitting. Why quit? If you don't got time, be a swing trader. If you do have time, switch to, day trading. If you can't day trade because it's a little too fast, go to short-term trading. Trade the weekly range. Hold it for like a day or two. Use the weekly chart down to the 1 hour. Or maybe you just have absolutely no time and you don't want to be a swing trader, you want to be a position trader. Okay, maybe you have to have a ton of patience, but use the monthly, weekly, daily, enter on the 4 hour. Hold the position for a month or so, or more, however much you want to do it. Use all the same concepts that we talk about in the lower time frames applied to the higher time frame. It's all the same. So trading, there's no excuse to not fit it into your life somehow. As long as you can make time to study, you have an opportunity, especially now because we have all of this stuff at our fingertips. It's amazing. It really is. Adam said 10% a month is crazy. At third payout, prop firm is going to ban you. Not necessarily, actually. Of course, you want to, like ICT says, you always want to have some negative days. If you become really good, you want to make sure that you're tossing in dead trades. Say you're able to make 10% a month regularly. You want to make sure that 1 month, or a couple of days throughout the month, you're having losing days. They don't have to be massive. Just enter and exit with a small, tiny loss on the lowest leverage. So they can't see you're just spectacular. Most people aren't going to be that accurate. You don't have to be 70 to 80% accurate. You don't have to. Jade Cap only is a 40% accurate trader, but his losses are small. His wins are massive because he takes frameworks on the 1 hour and higher and executes on like the 15 and 5 minutes sometimes. That's how he's doing what he's doing. Adam said, I find setups in the 4 hour, 1 hour, and entry in a 5 minute. I trade in sync with daily 4 hour market structure. Yes, sounds good to me. Yeah, no perfection. Make sure that you're also seeking minimums. Okay, the minimums are 5 to 10 points in the S&P, 20 to 30 in the NASDAQ. Those are enough, like just enough to make it so, if you have like a fee or something with a real broker, you're still able to gain a nice amount of profit. Excuse me. But you're also able to cover the costs. It's part of why I like micros too, because the fee is a lot less. It's like $25 per standard contract. For a mini contract, if you take one normal contract, it's $25 off each trade. Automatically, you're down $25. So if you lose $50, or if you lose, like 50 or 100 or however much you lose, you got to add on $25 for the NASDAQ. For the S&P, it's $50, okay, per standard contract. So if you take an entry, again, you want to catch those minimums. You don't want to have any less because the fees will add up. And if you overtrade, this is the thing. Most people who deal with overtrading, they've never traded a live account. So they don't realize that every time you take an entry and trade 25 trades in a day, that you have to multiply that 25 attempts by the fee each standard contract is placing upon you. And it's even larger if you have multiple contracts. Each contract has a fee of $25 for NASDAQ. So if you have 5 contracts, you have what? You have a $125 fee right off the bat. Let that sink in, okay? So anybody that you see that's over trading on YouTube, they're dumbasses, okay? Like, bro, I mean, I try to think of a better way to describe it. It's so easy when you gain experience to see who's fake, okay? Who's just a straight fraud, okay? Just lying out their teeth. Like, it's just crazy, so... And that's the thing. This is not a well-known thing. Why? Because most people are not actually trading. They don't have a live account. Okay? Like, they don't face fees. Even in funded accounts, we don't give fees. Well, I mean, I guess they say they add on a fee. Some actually do. Some actually do have the fees. Top Step is one that does have the fees. They're that legit. Top Step is amazing. They're really, really strict, but hey, if you want that resource, you got to deal with the rules, So I wouldn't put your whole life on funded account rules, like your success on funded account rules, because, it's unreasonable, a lot of it. You should have like a 10% risk allocation at least. Some of them don't allow that. They allow, less than that, like 5% drawdown. In the real world, that it's not always going to be the case. Sometimes you're going to face 10% drawdown, especially if you're putting on real size. You may end up facing something like that. If you blow your account, that's rough. That's insane. 125 along with any drawdown you might incur. Yeah, right? Yeah, exactly, Tony. Exactly. So think about it. When you take just that statement, it disproves a lot of these idiots on social media who try to claim this or claim that. Just that simple fact alone, which is never mentioned in these people's conversations, ever. Okay? I mean, just that those simple things breaks the paradigm that these people are trying to shove down people's throat and their image. If everybody knew the basics, it's a basic topic. Most people don't know the basics because everybody, is being conditioned to just want entry and just do this and do that. But you'd imagine that the fees would be something people talk about. But most people are trading on a demo. Most people are not trading actual real life funds. So they're personally not even aware of it themselves. So honestly, they're probably innocently ignorant to the facts. And they're just trying to build an image. And they don't know they don't have all the facts. But they claim they have all the facts and know this or know that. And they sell a course and do all this nonsense. But they don't even know basic things like that. It's truly unbelievable. And it's pretty upsetting too when I look back on it to see how fooled I was from some people in the first year. And, I'm grateful that I didn't quit because I very well could have. I felt lied to. I felt played. I felt like scammy, right? I was getting totally scammed. But it was my mindset, I was taken advantage of because of my lack of understanding, which many new traders fall victim to in this industry. And that's why I am upfront honest with anybody that comes, whether they're a 1-year trader, 6 months. I have some that just started 2 months ago. They're not going to get away from the facts. Okay. You're not going to be sold a dream. And if that's uncomfortable to you, then maybe trading's not for you. And it's just that blunt, because if I don't tell you that, the market's going to. And that's going to be a lot more painful in many other ways than just, being an inconvenient truth at the time for the person that doesn't like to hear that. So it is what it is. It is what it is. But yeah, I'm glad I was able to mention that about the fees and the different things that we talked about. I appreciate you guys indulging in the conversation. This is, part of why I personally enjoy these live calls, because I get to talk to you guys, and see how you guys are doing and hear some of your own experiences and what your goals are and stuff like that. I really enjoy that type of stuff. So thank you guys for engaging with me. But yeah, so let's finish the analysis, shall we? So yeah, we'll see if this will go higher. We're in a consolidation, so it could do either thing. But given what we see structurally, obviously, unless it proves otherwise by breaking this middle portion of the balanced price range, we're going to continue to try to seek higher prices. Okay, so now moving on to DXY. We got this quarterly fair value gap down here. Simply looking at this high to that low seems like it is a retracement. My line in the sand for this, we had a breaker down here on the monthly chart. We've kind of blown past that a little bit, but I still trust this down wick. I wouldn't be bullish on the DXY, honestly, overall, more long-term, until price was to really start to justify, maybe turn this into an inversion fair value gap. Stay above this one and then break the midpoint of this wick here, closing above it aggressively, because then that would make me kind of think that this high may be in jeopardy. But yeah, my anticipation is the fact that this is going to continue to drop. That supports the idea of the currencies we just talked about earlier rallying, while this, again, just acts like a retracement to then set up the displacement back down to the low here. All these previous lows in here, they're all weekly lows. So those are all relatively easy targets to identify. We've got the previous week high and low, so that those are the first initial liquidity pools as always. And then, of course, if we can give a displacement down below these areas, we got this wick, the quadrants between that wick, the low, and then the rest of this quarterly fair value gap as a potential target. That's what I would like to see. Again, my line in the sand is a weekly wick. I want to watch this fair value gap here, this one here, see how that's going to behave, and that's going to give us a determination whether the price is going to continue or if it's going to start giving us evidence that it's going to go higher. Here, let me just look at comments real quick one more time. If you feel the same as me, but I feel that I can't quit from trading and that shit kills my mind. I'm not doing good at uni and work, no social life, but I'm still here. Yeah. So I want you to try your very best to not sacrifice your social life. This is something that I'm probably guilty of. Definitely sacrificed a lot of friendships, things that I wish I didn't do because of this. It's a mistake that, I'll have to continue to try to improve on. I definitely want you to try to make sure that that's, because you're so young too, I want to make sure that you don't just sacrifice friendships and different things because you think you need to hurry up and do this. Because if you're going to do this, it's going to be here. And whether you study, 10, 15 hours a day, or you study, maybe 2 or 3 to 5 hours a day, or a couple times a week, just so you can make time to spend time with your family and some of your friends and have that external enjoyment out of trading. I think that's a very worthy adjustment in life for you to do, brother. I personally needed to go full on into this, partly because I wanted to kind of get away from the problems I was having. I wanted to kind of like block out certain stuff that was taking place in my life, and trading was a wonderful distraction. Obviously, I paid the price for coming to trading, thinking about that stuff. But, there's some mistakes I wish I could go back and fix, and social life thing is one of them. And just trying to just realize that I'm going to be here. It's going to be here. I think it's benefited me because I do very well and require obsessing over certain stuff if I want to be good at it. It's not like I could put one foot in, one foot out, and then just be successful. It just doesn't work for me. It works for some, but not for me. So it was kind of like a requirement for me to do things the way I have done them. But for you, I want you to make sure you reflect on that and see if there's any way that you could not neglect friends, family, or anything else, while still making sure that you set a time, right, for you to go study. Okay, say you're going to study on Mondays, Wednesdays, and Fridays, and you're going to pour in hours. But then the other days you're going to still maybe put an hour or two, but you're going to go make sure you intentionally go talk to friends and family. And, if you don't like university, you're not the only one. I never went to college. I dropped out of high school and then got my GED, and I don't really care. Okay, it wasn't going to help me trade. So it is what it is. I didn't have any other goals outside of, playing sports when I was younger. And then I tried construction, didn't really like that. And trading is the main goal and passion in my life now. And it's going to remain till I die. So, yeah. And of course, if that's how it is for you, then, you got to make some decisions and make sure that you don't just, you don't try to rush yourself because you're young, right? There's still a lot of stuff for you to experience and learn in life in general. We think we know everything. I thought I knew everything when I was younger. Come to find out, I didn't know anything, and I made a ton of mistakes that I thought were correct. So it's, and that's not too far off. I'm only, 11 years older than you? It's pretty much the same as my brother. Pretty much exactly. So yeah, it's the same advice for him too. You know, but so yeah, I feel average people don't help me. Yeah. Yeah, it's weird. It's a very weird thing. It's funny you mentioned that. It's very weird because the world that we're involved in is so detached from the traditional normalities in life. Everybody thinks wake up 9 to 5, go to university, get a full-time job, work till we're 60, retire with barely any money, or in some cases good money depending on what you do, and ride off in the sunset with like 10 years to enjoy. And this shatters that whole way of thinking. And when most people are involved in that other way of thinking, while we're involved in this way of thinking and have been exposed to this opportunity, I've heard another trader talk about this too, how he sometimes has a hard time even relating to like certain people, like women and different people, like just friends that he doesn't know. He's just meeting for the first time. What's his name? Doji on, he's another ICT trader. He's young, and he's even noticing that. So, I mean, it's a commonality that I'm starting to notice amongst, traders that are really serious about this, that put in a ton of time, that see themselves doing this full time. It's a very common thing. It's because your mindset, because you're forced to change your mindset drastically. Okay, like your thinking and thought process towards success and money and things. All of it just gets totally changed, like completely different. And you realize over time that most people are in a specific programming, like their mind is in a specific programming, and they don't even know that there's a way that they can get out and go see a whole different, brighter, more amazing world. And it doesn't have to be just with trading. It could be with the online business or anything else. But so many people are trapped in a specific way of thinking. And many people that are, like I said, that are traders that take this serious, have like a hard time relating to people. I know it's, somewhat present with me too. And then, it doesn't really help that I sacrifice so much, including relationships and friendships. I just look back and I just think like I have nothing in common with almost anybody now, because, unless it has to do with like certain things. But yeah, it's a very interesting thing. Dodgy, I think his name is, on YouTube. He made a video about this. You should probably go check that out too. He makes really good content. Him and JCat too. So I'll spread the love. They're amazing. Said I'm in university so that my parents don't kick me out of the house or keep me working at the family business 12-14 hours. Well, that makes sense. How about this? Do you have a chance to get into maybe classes that can help you in terms of business? Maybe go to like a business class. Maybe go to a risk management, finance class. Yeah, that would be a pretty solid opportunity. Obviously, it's probably not to engage in a situation where you're going to get a job from that. Maybe you do, maybe you don't. But those are really helpful in terms of understanding dynamics that involve the economy. And of course, business will help you understand business, and trading's a business. So you're going to eventually have to structure your trading business as a business. So you want to learn how to do that. So since you're young and you have the opportunity to do it, maybe get through some of the stuff that you're already doing, satisfy the parents, and to satisfy yourself, maybe you could focus on some things that'll actually benefit you in trading, so you're motivated to go and actually go to those classes. I'm not complaining. The truth is that definitely. But I'm afraid of not achieving anything, and at the same time, I feel like I'm going to achieve what I said. Yeah, you're young, so that's very normal thing. Mind you, you have so much life ahead of you. You have no authority to be worried about being a failure in life right now. You haven't even experienced 20% of your life, assuming that you live to 100 years old. So you're not even at halftime. You're not even at a quarter of your life yet. So it's unreasonable. I want you to listen to Gary Vee, okay? I want you to, if you haven't watched him before, I want you to, or maybe you have seen a couple clips, I want you to go in and obsess over Gary Vee content. He changed my mindset towards the way that I view success, the way that I view certain things, just in general, in terms of progress and where we're at in life and different types of stuff. Oh, nice. But theory, not practice. Okay, yeah, I want you, like I said, definitely go look at Gary Vee for the last thing you said, being afraid of not achieving anything. You have no need to think that way. Again, do what I said before, right? The negative thinking, right? I want you to take that paper and tally it up now. There's one right there. And then all the other stuff that you think any negative thoughts about, honestly, write the tallies. But yeah, you're studying economy, but theory. Honestly, I don't know really, like, theory. Is it theory? A Gary V, like a V like Victor, right? Have you ever heard of Gary V? V like V, right? V, like a viper, Victor. But man, if you haven't heard him, oh man. Yeah, oh man. If you've never heard who Gary Vee is, please search him up. Please search him up. Matter of fact, you could search up Gary Vee 20-year-olds on YouTube. And it'll pop up so much content where he's talking about this conversation here. Obviously there's a lot of things he talks about, but in a nutshell, you'll see why I'm sending you to go watch that. You'll see exactly why. And I think it'll be very helpful to you. And it'll kind of justify some of the things that I've just mentioned, that you have all this time. Oh, yeah. Amazing. Well, I didn't know you're from Spain. Well, I mean, Gary Vee is kind of like international. He's global. Known global, I guess. Probably not as much in other countries. But, in some parts of countries. Yeah, please do, Adam. Absolutely. And then come back and tell me how you feel about it. Because, man, I promise you, content like that, mind you, once you figure out exactly how many negative thoughts you have and do that process, the next process is to go and purge any negativity in your social media. If you watch like drama this or drama that or hip hop news this or anything that has any type of drama, in this moment, if you're trying to trade and you want to improve your positive outlook and thinking, you got to be intentional, and there's a process. These are some of the things I talk about in my the processes that I employ with a lot of my students when I talk to them about this subject. You want to go in and purge your social media. You want to go in there and take away all the negative shit, any type of drama, anything that can be assumed as a negative vibe, because everything content-wise that you consume, your head's like a computer. So everything that you consume is downloading that experience to your mindset. You may think that, it doesn't affect you. Yes, it does. Because everything you see gets saved in your mind. It's like it's sticky. It grabs onto things. Every time your eyes pay attention to something. That's why, what the hell do they call that? Reticular activating system or something like that. Where you start to recognize things. Like if you buy a car, you see that car everywhere. If you try to find a model, you're seeing the model everywhere in trading. It's the same thing with your thinking. Whatever you focus on, you're going to see over and over and over again. And if you think about negative stuff, it's going to be all bad. It's going to pile up. You know what I mean? And snowball. And it gets worse and worse and worse. And if you let it happen for 30 years straight, it's so ingrained in your head to be a certain type of way that it's hard to change. So you might as well bite it now. Fix it now, expose yourself to these different ways of thinking now, and start working on becoming, having a better program in your head. So thanks guys for listening. Without judge, all this doesn't matter. We are men. We need to feel pain to gain some. Yes, absolutely, brother. again, I appreciate you as well for being so open and sharing this stuff with us. Because I'm sure there's some other students that are actual students too in school, probably dealing with the same stuff, thinking the same stuff. I know probably every single kid on the planet who aspires to be great has felt a situation like you feel too. Trying to contemplate like your success. How fast it's going to be, where you're going to achieve. Are you going to achieve anything? And those thoughts, without being guided properly, or put in the right perspective from someone that's maybe been here longer, like has more wisdom and more experience in life, sometimes it can be a roadblock that's unnecessary and can be fixed early, so then you can thrive for the rest of your life. And remember, and then pass it on to your kids too, when they're young, or even friends. You can also help your friends with this type of stuff. This is something for everybody. We're all individuals, we're all human beings. I mean, it happens with women too. You know what I mean? Like, they think the same stuff. So, we're not so different in that regard. In other ways, we're absolutely different, obviously. But yeah. So yeah, thanks for sharing that, Adam. I feel like that these types of conversations are important. Yeah, some people may not be interested. It is what it is. Again, I'm not here to be everyone's cup of tea. Sorry. Right? It's okay. Without pain, the real reawakening is never going to happen. Damn right, Tony. Absolutely. And Tony, I'm sure, has a lot of wisdom. He has probably a lot of wisdom about a lot of different things. So, Tony, I'm grateful for your insight, for sure. So, yeah. So, I hope it makes sense in terms of the DXY. And yes, Tony definitely writes facts. He's becoming a freaking savage too. It's going to be amazing. I can't wait to see what happens in 6 months, a year. He's already been crushing it, dude. Just keep following the plan, and it's going to be spectacular. Absolutely. So yeah, let me know in the chat if the DXY and everything else is pretty understood as far as what we think the price is going to do. Hopefully you guys have been kind of writing down some stuff, or just taking a note, like what this asset is, what that asset is, bullish or bearish, or undecided. Yeah, let me know in the chat if DXY, and at least the DXY, if it makes sense what we're looking for here, where our invalidation level is, and what the possibility is for a target lower, and what will trigger us to try to change from bearish to bullish, if it does take place, which in this case right now, nothing's providing evidence that that's going to happen. So we're going to have to wait for that assumption. So yeah, previous week's high and low, first initial targets. Let's watch how this weekly fair value gap behaves. And if we can get below it, my attention goes to these previous week's lows, and then possibly this low, the quarters though, in the wick. And then if it breaks those, we got the rest of this fair value gap, which could be a very strong narrative for maybe 2 weeks, 3 weeks, possibly. If we get a rejection from here, if we get below this weekly fair value gap, I'm pretty confident that that's where we're headed. So yeah, so that is my opinions there. Finally, we made it. Sometimes it takes some time. We got things to talk about. We ain't in a rush. Those that may be in a rush, definitely watch the replay. But yeah, so we are looking at now the NASDAQ. We have, again, like I was talking about earlier, hit this opposing PD array. So I'm going to watch to see if we could do a little more work inside that. Maybe stay above that. All right, so we're aware of what we see here. Okay, where price is at on this higher time frame. So we're going to keep that in our mind and drop down to a daily chart just to get a little further context. So like I always talk about, first thing you look at on the higher time frame is, if you're on the monthly, you look at the previous month's high and low and current week's high and low, or current month's high and low. And then if you're on the weekly, you look at the current and previous weekly high and low, and any other weekly highs or lows that are somewhat close to where price is at that could maybe be a target. And then same with the daily, right? You look for the previous day high and low. In this case, we're looking for Friday's high, as well as Thursday's high here, because obviously they're in close proximity. So when the market opens on today later on, it's going to have that high as a near-term target, and it's going to have this low as well, and the previous week's low as well on Friday, or not previous week, but Friday's low for this start of the Sunday going into Monday. Again, we cannot lose focus on what is happening on the higher time frame. In terms of that aspect of things, we are hitting a weekly fair value gap, higher time frame fair value gap, and we are dancing inside of that right now. And we're also reaching into a potential weekly bearish order block. Well, not potential, but it is a weekly bearish order block. So we're going to want to see the dance that occurs within that weekly bearish order block and this weekly fair value gap. Okay, we want to see what price is going to want to do here, because if it was to then blow out the rest of this and not really show any rejection from this weekly fair value gap, then again, if it gets outside of it, we'll use that as an inversion and continue to seek buy side. Given what we see here, I'm anticipating that unless something drastically changes, I'm going to be aiming for this high up here. Obviously, along the way, we have this weekly high here, the rest of this fair value gap, the midpoint of the bearish order block. And then, of course, we end up getting up to this high, and then beyond this high, we have this high up here, so that's relative equal highs. Okay, we have a shift in market structure after a run on stops. So, if you're looking at the YouTube model for this time frame, it hasn't quite set up yet. So we may see that unfold around here. It may hang around in here. There's no demand that it just accelerates and takes out this monthly, yearly high, right? It may take a little bit of time to get up there, and that's totally fine. But we'll have to gauge what that's going to do. If we violate this low, my attention would go down to this secondary fair value gap. That would be a pretty good indication that the upper time frames may be setting up a potential YouTube model. You can make the argument that this shift in market structure here, run on stops here, ended up becoming a YouTube model. This is also encapsulated inside of this this type 2 dealing range conversation I was having the other last week and the week before that. I'm not going to get too deep into that right now. I think I have a video of type 1 and type 2 dealing ranges in my private community. I have to see where I put it. I think it's there somewhere. If not, I'll just have to be reminded by one of my private community students, and I will make an entire redone breakdown of that, because we walked through that all week. So hopefully the explanations we had was enough, but just let me know. But yeah, so going into this week, again, I'm looking for the highs here, previous days. It's also the previous week's high. It's in conjunction with this Thursday's high. It's previous week's high. And then we have this high up here. We have that weekly. There we go. Again, we have that weekly fair value gap, weekly bearish order block. So we're going to see what happens here. I would not be surprised if we open up, sweep Friday's high or Thursday's high or both, and then decline to run a little deeper down into here. We have a new week opening gap in here. You can see how that was beautifully respected. We walked this and anticipated this all throughout this as a target. Engagements were a little bit lower than normal from last week because we did end up getting hit inside the, we did end up hitting the weekly fair value gap. So we anticipated that it would have been likely a little bit harder to gauge. So again, anticipation from experience and some of the stuff we talked about earlier today in terms of counter trend and retracement identification. Of course, each of these gray boxes you see are new week opening gaps. So even a new week opening gap that's all the way over here is going to be impactful, just as this one was. I mean, look how perfect that was. I am under the assumption and opinion that if we are going to target the buy side up here, as I stated over here when we were delivering inside this, not only was this a type 2 dealing range, we are also potentially in a large market maker buy model. Okay, so given the fact that that is going to be a further amplification to our trust that price is going to go higher, we are inside of a possible second stage distribution. Okay, right up in here. So let's take the mask off, shall we? First stage distribution. It's a first stage distribution. So got our little consolidation up here. We don't really got to use. Yeah. I'll just use this just to save some space, I guess you could say. So yeah, let's turn it green. So here is the consolidation. Price declined aggressively. Nobody that understands what the hell is going on thought the market was going to be falling off the face of the earth, going into a recession. Nobody in this world that is an economist that isn't a Trump deranged lunatic thought that the world was ending. We knew that there was going to be something take place like this. And yeah, you know, when you're looking at the financial markets, politics in terms of bias, who you like or who you don't like should be totally disregarded. You know, the reason I said the lunatic part is because these people are crazy. I don't know how they hate someone so much. You know, they're leaders and all this nonsense. That has nothing to do with the financial industry. Why give fake information on the financial market that people will lose real money? People were selling off their assets because these losers were literally saying that he's crashing the market on purpose and it's going to zero. And people really believe these things that they say. So they sold off their assets just so the big money can buy. Like it's incredible. And then you look at it, the other side was saying, buy stocks. It's going to be a good opportunity. And then it unfolds. While the people that are showing so much hate were liars and made people lose money. It's unbelievable how this is even allowed to be on the news outlets. You know, like I know people that have lost money just because they thought it was serious. Like, oh my gosh, the tariffs are going to kill us and blah, 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 blah. Not realizing that people that actually know, that are worth listening to in terms of the economy, tariffs are good. They may be short-term increase in price for some stuff, but for the most part, the country getting tariffed is going to have to eat it. Just like they did last time when big tariffs were implemented on China. They ate it, okay? We didn't get big prices. It was the greatest economy ever, at least, you know, in my lifetime, with stuff I've witnessed. And he was tariffing the crap out of heck of people, you know? And this time, too, tariffing the crap out of people. Have prices went up more than they've went up or were at because of these last people that just printed money into oblivion, which caused inflation? Seems pretty much the same to me. So nothing's moved, and we still have access to everything. And the stock market is now cleaned up all the losses that were occurred since January, since February. So everything that was stirred up was clearly incorrect. It's total lies because people hate someone so much that they're blinded. Like the facts are blinded by their hatred. And it's giving people bad information. It's hurting people. You know, whether they like the person in office or not, you know, so what? Why does that have to dictate what you're saying about finances, about financial industry? You know, it's just a smokescreen. And if everybody sells their stocks and there's so much hatred going and they lose money and then it shows back up, people are still going to be stuck in this level of hatred, because then they'll just say, oh, he just manipulated it, and try to come up with some lies. We were due for a correction. This was all fake rally because we were stimulating the economy by printing money and giving government subsidies to all these different government businesses and government employees and all that. It was just all fake data. And this was proof of that. Right when it starts to level out and proper things get put in place, it was going to take a dump. It was anticipated for the last 3 years that this was going to happen. And then it all of a sudden happened. Right when he turns off the money printer. And, you know, now we're right back to where it was. And we're in a much more stable situation. It's going to take a lot more at this moment for the market to want to tank and become really aggressive to the downside. You know, it's going to take a lot more energy, a lot more damage to the economy, a lot more than just a headline to send this market down. We're getting tariffs. We got like $2 trillion in investment now. The side of economics in terms of what's happening is phenomenal. And that should be a good thing for everybody because we trade this asset class. We want the U.S. to be stable. Otherwise, we're not going to have the most liquid asset to trade in the world. So anyone betting against America, I mean, if you're a trader and you trade U.S. assets, you should think twice and, not be so hateful. Okay? Like, relax. Just relax. There's a reason all these people want to come to America. Right? There's a reason people are flooding to get over our border. They love this country. A lot of them want to be here because they love this country. But some are, gonna hurt somebody, but whatever. But yeah, so this is what I see here. Obviously, beautiful structurally. Second stage distribution, if it gets traded through, generally won't see a deep retracement. Okay, so it will pull down into this. Hopefully we can continue to see a fast-paced run through this weekly bearish order block, through this weekly fair value gap I've mentioned. And that will all be justification even further for the second stage distribution to pump us up through the buy side. Right? So this is what I'm going to anticipate. This is something that is rooting my narrative being bullish, and it's keeping me there until something like this low gets violated, or we break down below this fair value gap, this volume imbalance, new week opening gap, and just start rampaging. Otherwise, these levels down here, any type of retracement into these levels, if we stay inside this area here, I'm going to continue to want to look at that as setups for buys. And, that's where I'm going to live. And if it declines, then I'm looking at that as a retracement from a opposing PD array. And I'm going to look to half risk that. And then once we get back in line with, directional move going higher, which I assume is going to take place probably shortly, we may sweep this low, then go, which is totally reasonable for the start of the week because there's liquidity here. Where's the most recent liquidity? From the liquidity that has been executed from last week, right? So Friday and Thursday. So if we open up, decline, thinking power 3, inside the second stage distribution, that'd be a beautiful scenario if we get a displacement going higher, right? And then we'll be able to find our model and do our little dance in between and, spike the football at the end of the week again. Okay. So yeah, this in a nutshell is exactly what I'm looking at. Okay. Hopefully it's very simplistic in terms of what I'm identifying. I mentioned power 3. I mentioned the possible market maker buy model here. I mentioned the likelihood that this weekly fair value gap may push price lower. Maybe the catalyst, the midpoint, may push us below the low here to sweep liquidity. Then if we can get a displacement back above the second stage distribution and continue to go higher. Again, these are all things and characteristics that I would like to see next week present us with. And if it does present us with that, I'm assuming that we're at least going to get the power 3 idea. You're going to now analyze Euro USD. I think I did, didn't I? Yeah, I did. Euro's right here. Oh, sorry. These are the futures. My bad. The Euro and GBP futures. I don't really trade GU and EU specifically. But nonetheless, the futures market and the overall currency market, they may have different numbers, but the aspects are going to be the same. The same analysis is going to be the same, Adam. But yeah, I trade futures. But yeah, the concepts, the points of interest, aside from like the numbers, they're going to be very, very, very much the same. The narrative overall is very much the same, right? It's still, I'm assuming, would have a wick. The only problem with currencies is the fact that every single broker has their own pool of liquidity that they are executing trade with. So that's why if you go from one broker to the other, or if you look at the futures market to Euro USD under FXCM, the highs and lows in terms of numbering may be different, right? Yes, I know that I do all my analysis in Euro FX and do technical in EU. Okay, yeah, that makes sense. Because, yeah, this kind of tells you the true story. But, yeah, if you can trade, let's say this, if you can trade eventually in Top Step and you're able to get the live data through Top Step, given that you're in Spain, I think that's a pretty solid way for you to get access to live data to trade U.S. futures outside of futures instead of like the CFDs. There's nothing wrong with the CFDs, obviously. They're just the numbers are a little different. Price action may look a little different, slightly. Higher time frame bias and narrative, though, will not be affected. It'll be the same. It has to be because it follows the futures market. Same with, Euro futures and Euro USD. It's going to have to follow in a very close way the futures in Euro and GBP. It's going to have to, because that's what it's basically copying. It is what it is, So, yeah, I want to do money with CFDs, then do money to futures. I'm not sure if you're allowed to legally, or I'm not even sure if you can trade U.S. actual futures contracts when you're outside of the U.S. I know CFDs is a product that was created to allow people that are outside of the United States to still have exposure to the U.S. market assets. It's something a lot of people don't know either. You know that trading CFDs and making money off them and withdrawing in the United States is illegal? You could go to jail for it. Isn't that crazy? But a lot of people show screenshots in the United States. They don't enforce it that much, I guess. I don't know. But it is in the law book that it's illegal. Like if you file your taxes and the IRS finds out that you were trading CFDs and you made money off that, it's a serious problem. CFD rules are more simple than futures. Yeah, I can imagine. In the financial industry, they like a bunch of stuff being totally sporadic. I trade both futures, funded, Forex, personal. Oh, nice. Awesome, Tony. I would like to say, do what you will, obviously, with this information or opinion. I would like to encourage you to specialize in one asset class. I used to trade gold and silver and GBP USD itself, Euro USD, AUD USD. I used to trade GBP, JPY. I used to trade all these different assets together, trying to find different opportunities. And, I wanted to focus on one. And I found that me focusing on GBP USD was perfect. I got my first 2 funded accounts. Then I ended up falling in love with the NASDAQ and just the futures markets and how accurate it is and how I can have 1 point as a, like price can go within 1 point of my stop loss and it won't just wick me out like it does in currencies because the brokers have the ability to open up the spread and wick you out if their algorithms see that you're that close or see that there's orders resting there really close to the stop. So that doesn't happen in the futures because it's a professional market. People's retirement accounts are locked into this, and it just doesn't have the luxury of doing that. Everybody in the whole world, if they're looking at a futures contract, they're looking at the same one. There's no difference other than the CFDs, which is just a replica of the futures markets. Is it possible he can use TradeAway also? Are you talking about Adam? He can use TradeAway, I think. You probably got to go look at their terms of service. They may or may not accept. I'm not entirely sure. I think they do. I think that'd be cool. Oh yeah, you got to double check. You got to check Top Step and TradeAway. Because if Top Step accepts you, TradeAway might not. And you may have to go with something else. They have a couple different brokers. So you could look at that. Gold just for swing buys. Yeah. I mean, you could look at it that way if you want. You want to hear what I use gold for? I use gold for hard capital preservation. That's what I use it for. Physical, or IRA, like a retirement account. Actual gold. You know what I mean? It's amazing. They got retirement accounts and everything. So you don't have to carry the gold, which is amazing. IP address solution. Interesting. Oh, you're talking about like a VPN possibly. Maybe, possibly. The question would be though is when you go to I think a funded account is pretty shielded, because if you trade something you're not supposed to in your country and you get a withdrawal, it's only going to show that the company paid you out for trading with them. It's not going to show you what asset you traded, and you're not going to be technically a trader. You're going to, I mean, it depends on the laws in your country. I know in the United States that if you this ain't tax advice. I'm not a tax advisor. You got to always go to them for any tax advice, but this is my situation. When you withdraw from a funded account, you're basically classified as a private contractor. So the taxes are a lot easier, higher rate, depending on how much you make, but it's very easy to do like a normal job tax situation when you claim the money that you've made. But yeah, I'm not sure exactly how it is in Spain. You definitely want to look into that. It's definitely worthwhile. Maybe not right now, right? Maybe do it when you start making, some small, or I mean, you could prepare yourself, right? Get a bunch of information about it, try to like learn it, and so you have it for the future. You're eventually aiming to get there, so maybe it's advantageous for you to mess with it. Taxes in Spain are so high, above 300K. 300,000 a year, you have to pay more than half. Wow, that's so with a funded account, it's going to be different. If that's how they're doing people that are investing, you might as well stick with a funded account, dude. That is incredible. Then again, you can also start a business. I'm not sure how Spain deals with businesses, like if they give them tax write-offs or protections, because I know here in the United States, there's ways to turn yourself into a business. You don't have to have a product or sell a course or anything. You just have to trade. Trading's a business. And you can incorporate yourself and have a ton of write-offs. Obviously, depending on how you structure things. ICT talked about that in the Ends series. For those of you that are in America, that want to go check that out. I talk about it sometimes too. So yeah. But yeah, that makes my stomach hurt, dude. 53%. You can kiss my ass. Okay. Big time. Like, bro. What? That's like punishing investors. That's insane. A normal company max 39%. Oh, interesting. Interesting. And what about like a normal job? Like if you just work a 9 to 5, because that is what the tax rate will be for a withdrawal that comes from like a funded account withdrawal or something close, Oh yeah, that's pretty decent. So yeah, that is the tax rate or close to it, depending on how much. Because I'm assuming that you guys have tax brackets. Like in California, the tax bracket is like, I think it's like below 30,000 a year. You will make, you'll have to pay 12% tax. If you make above 50,000, I think it's like 20 something percent. and then it goes up to like 25, 29, 30, and then I think it maxes out close to 40, above like 500,000 or something like that. I may be wrong. I may be a little bit off. They've adjusted things continuously, but yeah. But in Spain, people get 1.5. Yeah. Yeah, it's interesting. 1.5, huh? Yeah, if you made $1,500 in America in the current state that we're in terms of the way America is, you will most likely live in a garage. You will probably be homeless in California, where I live. And yeah, it's not good. It's not good. The average pay, I mean, if you calculate that, it's like what, 40 something thousand for the average American, anywhere from 35 to 40,000 a year. It's like what? I'm not sure. I'm not like the greatest with math, but it's definitely like maybe 2,000, 2,500 a month, maybe. In Spain, 1.5 a month. The bank can give you. Yeah, they're trying to trap the hell out of you. Yeah, they're trying to trap people with debt. Don't go into debt. It's not worth it. I would like just not do any of it. There's good debt and bad debt. Good debt is like buying a home that you're going to rent out to build cash flow, something that brings you money. Bad debt is debt you take on that is not bringing you any money, and it's just sitting there as debt, giving the bank interest. This is a very quick and down and dirty way to identify whether you should go into debt or not, depending on what you consider going into debt over. If it doesn't bring you money, it's bad debt, and it's going to be detrimental to you building wealth and building a strong income, unless you could pay it off quickly. And of course, good debt is being able to go into debt to get something that's going to build cash flow. So, and that's in every economy. I don't care where you live. That's just the way it is. Anywhere that offers, home ownership and assets and stuff like that, it's very, very, very important topic, right? So yeah, just kind of look at this and say that I guess this is pretty much all in terms of the analysis that I wanted to cover today. It's pretty much self-explanatory for the most part. At least I hope it is. So yeah, I'd like to see DXY continue to go lower, and I'd like to see the indices look to want to go higher. Okay, in a nutshell, right? See, some students ask me to hurry up and get to something or another. It's just gonna make me pay even more attention to detail. Let's just say that. But yeah, debt is a confirmation to your. Oh yeah, 100%. 100%. Debt pretty much ball and chains you to your job. Because if everyone's in debt, they're gonna think that, they cannot let the job go. It's more stressful. It's more this or that. They're more broke. They have less money. It's less enjoyable in life. So, again, you want to make sure you're getting good debt if you're going to get debt. Get debt to buy assets. Not financial advice. Again, it's, it's your decision. This is just my opinion and what I've heard from some smart people that I've learned from, including ICT. But yeah, you never want to go into debt for no reason. If you go into debt, first of all, hopefully you can afford it. Hopefully that debt is going to result in cash flow long term, not just one transaction. Unless it's like a giant transaction that's going to get you all the debt back. But yeah, and bad debt. What's another example of bad debt? Car, right? Getting a huge down payment on a car, huge car payment, buying a Lambo when you can't even afford it. It's a difference if you have an LLC or an S corp or an entity, right? For those that don't know, in terms of a business, and then you buy the car through the business on a lease or entirely, because that then becomes a tax write-off because your business basically bought that car, not you, the person. So if you buy that car under a business name or lease the car, pay payments under a business name, that now translates to a full write-off because it's an asset to the business. So it's what? A business expense. In the United States, those are some little things that, can help you really, really start to knock down what you owe in taxes. This is why taxing the rich will never, ever, ever do anything. It'll never do anything. They will always find a way to get around it because the tax code favors business owners. And that's just the way it is. It should be that way. You should want to start a business, but, it should be a little bit easier on, the working class. But they got to be financially literate because if you don't own a business, you at least have to have assets like a home because then you can start making write-offs from that. There's other ways to do it other than just having a business. But that's one thing that I've also learned as a trader or business owner in general. You need to do your very best eventually when you start making money to master your understanding of the tax code in your country or your state or wherever you're at. Or if you don't want to do that effort, then you better have someone that's really good that you're willing to pay, excuse me, that can handle that stuff for you. Right? So, because taxes can get out of hand. They can get real, real, real out of hand. So you don't want that. You don't want to deal with that. Oh man, I had to deal with that my third year. It was not fun. So I had to rearrange things. So, if you can't have a business, you could just trade through a retirement account. If you're in America, trade through a Roth IRA, trade through a normal IRA. You can have unlimited trading in there. Again, it's not financial advice. You go talk to a financial advisor. This is information I was told and personally engage in. Every single entry you take doesn't matter. It just matters what you withdraw from the retirement account. That's what you pay taxes on. So if you make like $100,000 in a retirement account and you're going to withdraw $20,000, you're not required to pay taxes on that full $100K at that moment. You just have to pay on the withdrawal that you took as a distribution. So then instead of being taxed off of $100K that you made in terms of income, you'd be taxed on $20K. And then, all the stuff you withdraw, you're going to continue to pay taxes based on what tax bracket that withdrawal falls under. Of course, you also got to include the other things that you made money on if you have other stuff. But, it's very important, right? Again, this is another thing most people don't get to dive into because most people are not getting tax returns from their trading. They're not filing taxes because they're not making money. Right? I mean, it's pretty obvious, right? That's the thing. That's why people that are really seasoned look at some of these people and some of the stuff they say and just laugh and cannot believe how these people are fooling people. It's just incredible. And it's because of the lack of financial literacy. So it is what it is. But yeah, guys, I've taken up so much of your time. I apologize for it being such a long call. We just had a lot of extra stuff that we had to talk about in terms of psychology and risk management. We rehashed on counter trend trading. We talked about every asset. We talked about multiple different topics related to what price is doing. We talked about the fact that this has an invalidation level of this swing low. We talked about the S&T at the highs of this market. We talked about the currencies at great length. We talked about DXY quickly. We talked about the NASDAQ and indices fairly quickly, right? Went through that stuff. We went through a bunch of other different things. So I hope you guys got value from today. Hope it was time well spent, even though we did go over my 2-hour limit. But yeah, and I appreciate you guys engaging in the dialogue. I appreciate you guys sharing your struggles, your successes, your experiences, your thoughts. All of that makes this community better. You guys are, integral part of the community, not just myself. Same with my private community students. They are the reason that community is amazing, aside from me. So you guys are just the same here in my YouTube family as well. You guys, we're all one big family, but, just kind of have our own little sections. So, yeah. So again, thank you guys for hopping on. I hope you guys got value. Definitely let me know if you have any questions. Don't forget to like the video, share the video with anyone you think can add value or can get value from the content. And again, don't forget to subscribe. And I'll see you guys on Tuesday. And those of you in my private community, we may talk this afternoon or for sure, the whole entire week next week as normal. Okay, so God bless every single one of you guys. I'm rooting for you. Don't let anything get to you. Stay strong, and let's have another amazing week. And I will talk to you guys on Tuesday. Take care.